have interest rates and the real economy that you have to think about and worry about. How do you think about where we stand right now and where the risks are in either rates staying too high or the economy starting to turn downward?
Yeah. When we think about interest rates today, it's really resulted in a bit of a standoff between buyers and sellers. And the sense is that as rates do come back in, we'll start to see more transactions. But it's absolutely undeniable that when we think about industrial sales over the last year, really 3 years, it's gone from $150 billion of transaction volume down last year to about 80 billion, 87 billion. This year, it might even be 15% off. First quarter numbers were indicating about 15% off of that amount. So clearly, the dust is not settled. We're not at a point where there's a market clearing sort of capital stack that people can put together on the debt and equity side to effectively get back to some normalcy. But there are green shoots. Maybe that word is used too much across the real estate space, but there are absolutely green shoots to indicate that people are getting back to business.
Well, given the fact that your real estate, at least as I understand it, basically is real estate where something is going in one door and going out the other door, maybe there for a day, maybe there for a week, you really have a bird's eye view on the economy. Are you able to see, there's still this debate whether there's a recession ahead or there's not a recession. Based on your business, are you able to have a firm view on that?
Yeah, we don't see a recession at all. That's not in our planning. There has been a technical freight recession, but remember what we're going off from where it had been, meaning we had a market that had e-commerce growth of 15% prior to COVID. COVID went to 40% annualized growth for 2 years, and now we're back down to about 8 or 9% per year. That's a very strong tailwind driven by the consumer and the continued change in behavior. And when we contrast that with really where that's come from, which is coming out of the retail side of things, which has now found a bit of an equilibrium, has been able to move forward, but it's done it on the back of 2 billion square feet of industrial properties having been developed and put into the market over the last 4 years. And to give some context, that's enough space to cover the island of Manhattan 3 times.
Wow.
So it's massive supply that's been put in place. That said, construction starts in industrial are down by 45% from this quarter, first quarter to first quarter last year.
So maybe that supply helps to explain why, as Shonali was talking about, we have so many great real estate conversations together with newsmakers such as yourself, why there's so much interest in your space. Because I've been hearing more and more about how from the flows of money, on the one hand, you have the really big guys like the Blackstones and the KKRs, and then there's really no middle ground. But on the other side of the barbell, there's somebody like you, a real specialty niche. What is it about your space that folks are really liking, even given this supply? Is it the potential that it will be filled up to capacity at some point?
Yeah. So I think you're absolutely right on the specialist side. Most investors are looking for a bit of a different take from what they can get in the much larger asset management firms. In our case, we focus on real assets for the transportation space, so that would be real estate and infrastructure. And when we see the performance of that property type, it's quite resilient. It's been very strong. And as we think about the market moving forward, we continue to see growth in that space that will exceed industrial being absolutely the area where people want to be today from an investment point of view. We see that continuing to accelerate as the market continues to evolve.
Bob, we have to leave it there. We thank you so much for coming in studio. Joining us, that is Realterm CEO Bob Forty, Bloomberg's Abigail Doolittle. And coming up, we're going to take you live to the Bloomberg Technology Summit with WeWork co-founder Adam Newman. Certainly a lot going on in the world. Adam Newman has tried to be involved. We're going to ask him all about it. That's up next. This is Bloomberg.
ultimate goal of doing away with the central bank still stands. The discussion regarding the central bank is primarily moral in nature. The way we see it, there's been a cultural change in Argentina. Today, wages are miserable, not through our own fault. That is due to 20 years of populism. Argentines understood that populism is no solution. The quick as they saw them during the last 100 years, both the criminal politicians and criminal economists, they were all false. And we need to look for a pure orthodox market-based solution. And that's what's going to succeed. And that's what's underway. In fact, there are all indicators today that show activity in the agriculture sector, in the oil and gas sector, in mining. Well, our economy is recovering strongly in those departments. There are indicators that point to the fact that Argentina could really make a strong comeback.
Nobody covers the top global leaders like Bloomberg Vision and Radio. Context changes everything.
He's back. This is Bloomberg Markets. I'm Shonali Basak. We're going to get a chunk on the markets here with Abigail Doolittle alongside me because we do have an interesting move in bond yields lower despite some very sparse data, let's call it, given there's more data next week.
Yeah, we do have a move lower for bond yields, and this has really been the case since the Fed last week. It seems that investors are really getting the idea that the Fed's not going to be hiking this year, waiting for more data, of course, ahead of the June meeting. It seems most people who are expecting some kind of a cut, maybe in September. So in lieu of that, but to looking, it's really the 2-year yield that's moving. We're at 4.81, still close to 5%. Really interesting. There were some panel yesterday coming from the Milken conference saying that we could go above 5%. I think that was somebody from Carlisle saying that we really have to be on guard for the possibility of higher for longer, but not so much because of data, but because of Treasury flow, that there may not be adequate buyers. That's kind of interesting. But I think it's also worth noting, Shonali, at this point we have stocks just a little bit higher, but that's been the trend too. So after those 3 down weeks, as yields went higher, we now have had yields lower, and we have stocks up going for a 3rd week higher.
Has that relationship been more sustained here, the idea of yields lower, stocks higher?
Right now, it seems to be sticking, but it's really been over the last week since the Fed that yields went higher. We're going to have more information. I think from a technical perspective, you know that I love charts. I think that there's probably more reason to think that we see yields go higher, maybe significantly higher. The 2-year yield could be setting up for a move above 6%. And let's not forget, Jamie Dimon, one of your favorites, all of our favorites, CEO of JP Morgan, he recently said that we could see yields go, I think, above 8%. And he's been very prescient in the fact that a year ago, I think he was talking about 6% and then 7%. So he's been the outlier, I would say, in terms of higher for longer, but really making the case. But I think that we have to wait for the data and see what, of course, happens.
All that data, of course, not coming until next week. And we have those bond auctions as well. We have a 30-year today alone. Another area, we've been talking about this, that this matters the most is real estate. You've been covering that space really closely. We just had one conversation on perhaps even a rosier part of the market.
Yes.
What's still looking under pressure here, given where rates stand?
So it's all about office, especially not anything that's not Class A office is under pressure. The Class B, the Class C, in terms of vacancy rates being higher, and this wall of mortgages, CMBS, that we've been hearing coming due by the end of 2025. Everybody's talking about how we're going to have this come to Jesus moment where basically the buyers and the sellers are going to have to meet. There haven't been a lot of transactions. If that happens toward the end of next year, or this year, I should say, a lot of people are thinking that it will start start to open up, that values could be anywhere between 10 to 25% lower, and that could put pressure on the overall commercial real estate market.
And that's commercial real estate. We should also say that according to Bloomberg's reporting, roughly 1 in every 37 homes are now considered seriously underwater as well in the United States. You have to wonder how much resis are also going to feel that pain. Abigail, we thank you so much for your time. We're going to go to break first before we bring you back to the Bloomberg Technology Summit. Again, we have WeWork co-founder Adam Neumann coming up shortly. Stick with us. This is Bloomberg.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Let's take you over to the Bloomberg Technology Summit in San Francisco. Adam Neumann is now speaking there with Brad Stone.
Judge get to choose what deal he's going to take, and I think it gets quite technical. But let's say something else just about, back to what I said, from 16% to 24%, 50% growth in 1 year, without spending any money on on a business that now has aging buildings, in what I think is one of the worst office markets, maybe in the history, but definitely of the past 40 years. Look around just here in San Francisco, but it's a global phenomenon. If they achieve these very rosy plans that I think are unfeasible, they would then need to, in 2025, grow from that to not go cash flow negative. What I'm really telling you is that the plan that they're planning to approve, or if they approve, it hasn't happened, would be a plan that takes the company cash flow negative less than 12 months from when it came out of bankruptcy. And we're planning to show it in depositions. We have a chance at the confirmation, and you can take it as far as...
Okay, so this isn't over.
This is not over.
Well, we do love a redemption story in Silicon Valley. Of course, Steve Jobs famously went back to Apple. But what would you do with WeWork? And considering the obstacles it faces with the economy and work from home, what is your vision?
So I think the only reason we were even interested in WeWork is only because of Flow. As Flow is thinking...
Why don't you describe what Flow is?
So Flow, I'll just take it a little backwards. Are we going to go by that clock or by the clock?
You leave that to me.
Okay.
Yeah.
Because I need to manage the questions, but answers.
Roughly, yes.
Roughly, yes. Okay, so I'll give you the short version. Okay. Well, the very short version, when I moved to this country in 2002, I lived in an apartment building with 135 apartments. The first thing I noticed is what the neighbors weren't talking to each other. I had this great idea, why don't we create a company called Concept Living? And I was in CUNY University, I had 4 other students with me. We went to the entrepreneurship competition and we didn't go to the next stage. I remember going to the dean, I said, Mr. Dean, I understand you can't reverse whatever happened, but why? Didn't we even go to the next stage? What a great idea to bring community into buildings, would have increased the NOI, would have made people pay more rent. And he goes, Adam, an entrepreneur can't go and disrupt an industry of that. Interesting lesson from that is, if you're right now an entrepreneur, if you're right now a dreamer, if you're right now a student, and you have something you really believe in, don't let anybody stop you. The worst case scenario is you will fail and you will learn great lessons that will then apply to the rest of your life. So that's one. Taking it 22 years forward to today, 70% of today's 40-year-old and younger in America are renters. They spend 34% of their total income on rent. Not only that, we live in a time where we're so connected digitally, and we just heard in the panel before how more connected we're going to be. We've never been more disconnected physically. There's loneliness, there's mental illnesses. Flow's vision is oneness between a person and themselves, their neighbors, and their world. We deliver that vision by building a vertically integrated company. We build our own tech, we manage our own buildings, we own our own buildings, and it's our own brand. Just to explain why that's so important, traditionally, landlords would be landlords, and they would use third-party providers to build the technology for that. Those third-party providers, because they're not the owners, would build what they thought was best. These third-party provider technology companies are based on accounting system. Flow has to rebuild the architecture to be able to base it on whatever we think is most important. And to deliver our mission, what's most important is actually the resident, the human being. By putting the resident first and building this very flexible architecture, we're able to do almost anything we want in the building. And I'll just give one example. Community commerce. Our residents, one of our buildings, Flow Fort Lauderdale, that's doing extremely well and is delivering on this promise, and the net operating income is up more than 30% since we took over, which in real estate terms is a very large number. Our residents all have services, not all, but a lot of them. One is a yoga teacher, one is an accountant, one is an insurance salesperson, average age about 32. And they want to rent, they want to give these services. They come to us. For now, we're putting it through 2 different things, but it's all getting integrated into the app. They say what their service is. Now you're another resident. You would like to buy or consume that service, and we connect you and put you together. From the moment you go to Flow, and you guys can check out Flow at flow.life. You go to the website, you want an apartment, says, do you want community? Do you like pets? Do you like wellness? If you like wellness, do you like meditating, or do you like lifting weights? And whatever the thing that you're going to say, that you chose to tell us, we're going to know about you. Then when the next event is going to happen, we're going to prompt you and offer it to you. And by doing these little things, you're allowed to really deliver on this mission. Now, as an entrepreneur, I get the bug usually every day. I try to stop it every month. I'm looking at my CTO right now. He has to build a system that's ready to receive all these ideas. Without building the architecture the way we did, you would not be able to deliver on our promise and our mission.
When Andreessen Horowitz invested $350 million in this new idea, you could kind of hear the collective gasp from the tech press because they were betting on you after a quite public experience with WeWork. Why do you think they made that investment?
First of all, that's a question for Andreessen Horowitz. But, and I know Ben has spoken a little bit about it and said different things. Also something that not everybody knows, we also put in $350 million ourselves. So it was really done.
And you had some of these apartment buildings already.
I did, and we chose the best ones. The other ones we sold, we chose the best ones and contributed them to the company and created perfect alignment between us and Andreessen. But I happen to be coming back from a board meeting right now. We had one 2 days ago. And our board meetings are amazing. Mark is our board member. Ben joins the meetings. And we all sit around the table. We suggest, we talk about whatever it is. And without getting into details, again, my CTO here had quite an experience. We presented everything we're doing. Everybody was so excited. And then we gave an idea of a new thing we want to do in 2025. And Mark and Ben, based on 30 years of experience and a lot of investing, didn't think it was a good idea. And the speed in which they communicated it, the strength in which they pushed back, and the conversation around the table was just something that I wasn't used to. It's the kind of partners that you need. These are not just tech investors, the best, I think, in the world. These are entrepreneurs who've built multiple businesses. And the mix, the combination of them with everything they do best, and the team and myself with everything we do best comes together. I think it's the right business at the right time.
Interesting. I'm also hearing sort of implicitly that maybe you didn't have that same kind of board relationship at WeWork, and that a little bit of friendly pushback is always a good thing.
So you're saying friendly pushback. The pushback is real. So it is friendly because we're partners and friends.
Yeah, there was Masayoshi-san and his colleagues doing the same thing at WeWork.
So I'll just one more thing about Mark and Ben. For those of you who know them, the pushback is real. It's not a soft pushback. It's a real pushback, and that's what I want as a partner. I'll give you one fact about my board from before. For 9 years, and it's in the board minutes, every single decision that was ever brought up in the board was unanimously a yes. Not one time in the record was there a no, until the time when I said I'm stepping down, and that was they voted. That was a yes also.
That was Flow co-founder Adam Newman at the Bloomberg Technology Summit in San Francisco. Fascinating conversation about his new startup and WeWork, of course. Now, time now for the stock of the hour, Shark Ninja, the company behind Shark vacuum cleaners and Ninja blenders, boosted its annual profit and sales forecast driven by better than expected results in the first quarter. Shares at an all-time high since going public last August. And for more, I'm joined by Shark Ninja CEO Mark Baracus. You know, it's interesting, Mark, at a time where a lot of people are worried about consumers, you're putting up numbers that investors are getting excited about. What kinds of customers are coming to the table at this point? Are these home buyers looking to fill their kitchens with new appliances, or are they repeat customers?
Well, thanks so much for having me. And as you said, Shark Ninja had a great first quarter. Our business grew 28%. It grew 22% in North America. It grew over 40% internationally. We go to market under two market-leading brands, Shark and Ninja. And I think the Shark Ninja consumer is a really discerning consumer. We offer market-leading performance for our products. We offer great quality, and we do it at a great, extraordinary value. And I think a lot of the consumers that are coming back to us are consumers that are repeat buyers, having bought Shark or Ninja products before, or new consumers that are getting into the Shark or Ninja brands as we enter into lots and lots of new product categories.
As far as new products go, if you're buying a Ninja, what else are you planning on buying with you?
Well, we're in 33 different product categories. I mean, we're in 26 markets around the world. I mean, if you ask about the Ninja brand as an example, we're a market leader in blenders and food processors. We're the market leader in cooking appliances. We're the fastest growing outdoor cooking appliance company with our grills and our ovens. We've just expanded into outdoor coolers with our Ninja FrostVault. The product launched only a couple of weeks ago and is completely sold out and has been a real social media hit. So, you know, there are lots and lots of products within the Shark brand and within the Ninja brand for consumers to own and to buy.
On the Ninja brand as well, Mark, I'm sure a lot of our viewers here best know you for making their smoothies before working out with a Ninja, or making smoothies based on kind of this health push you've seen really across America, especially on the heels. A lot of these weight loss drugs have inspired that push a little bit as well. Are you seeing that, and how much can that really drive things for you moving forward?
Well, look, I think Ninja is about empowering the consumer to do great things in the kitchen, outside the home. It doesn't stop with just our blender products. I mean, our air fryers, again, our outdoor cooking appliances. In the Shark brand, we're the fastest growing hair styler brand in the world right now. We're the second largest vacuum brand in the world. So there are just so many products, for us to get consumers excited about. I mean, I'll mention also within our Ninja brand, there's a product called the Ninja Creamy. It has 1 billion impressions on TikTok. So consumers, when you talk about health, rather than making a smoothie or a protein shake, they're turning it into ice cream, and for 300 calories, they're eating a pint of ice cream and enjoying it. But social media is really, driven very much culture around a lot of the products that we bring to market.
You brought social media up a couple of times here. Really curious about how important that is from you from a marketing perspective, how many dollars it may save you at the end of the day, and if TikTok faces trouble in the U.S., what it could mean for you and the spread of your brand.
Well, as a company, we spend over 6% of sales on R&D, and we spend over 9% of sales on advertising. Our advertising is this always-on 360 marketing approach to create consumer demand. And we do that through TV, we do that through social media, we do that through experiential events. And, whether it's Instagram or TikTok that you mentioned, I mean, consumers are finding lots of ways to be able to express their interactions with products. I mean, YouTube is becoming a bigger and bigger vehicle for us, Reddit, Pinterest as well. So, in the event that something does happen with TikTok, I mean, there are lots of ways for the influencer and consumer community to be able to demonstrate and talk about, Shark or Ninja products. I mean, years ago, you would go online and you would write a 5-star review about the product, whereas today, consumers are making videos and communicating those out to other consumers about how much they love the products.
You're talking a little bit about new products as well, Mark. When you think about the lineup that you have ahead, what product, for the sake of Shark Ninja, are you pushing the most, and at what price point? What's going to be the biggest growth area?
Well, again, like I said, we're in 33 different product categories. We launch 25 new products a year. We just launched into the cooler space with the Ninja FrostVault. We launched an indoor-outdoor cooling system called the Shark FlexBreeze that just launched into the market that's doing great. There will be 25 new products that will launch into the market, and kind of our growth, has all been organic over the last 16 years. We were a small company back in 2008, and today, we're a market leader in our space. So we grow the business through growing existing categories that we're in. We expand into new and adjacent product categories, and we grow internationally. And I think through those 3 growth pillars, we've been able to grow at a compounded growth rate of 20% a year for the last 16 years.
Mark Baracus, CEO of Shark Ninja, thank you for your time on an earnings day, and of course, as your stock hits a fresh all-time high. Now, coming up, we're going to talk about a global surge in debt sales this week that covers companies from CVS to Coca-Cola to Block. And it's today's Wall Street beat, that debt deluge. We're going to talk about that next. This is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd put everything I had into it.
I get asked more about our relationship than I do my wife.
You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The deal.
The Deal.
The deal.
That deal.
The deal.
Huge deal.
Who dug this up? What are y'all's in trouble?
This is Bloomberg Markets, and I'm Shonali Basak, and time now for the Wall Street Beat, because from U.S. to Europe to Asia, companies are seizing on strong investor demand and a lack of clarity around funding costs headed into issuing the most debt in years. Bloomberg's Michael Tobin wrote a feature on this surge. It's one of the most read stories on the Bloomberg terminal, and he joins us now today. Talk about what exactly is coming to market here, because there has to be some awareness of risk when you're thinking about investing in credit in particular.
Absolutely. Everything is out there right now. Like high-grade, investment-grade companies are all hitting the market. We've had more than 40 deals in the U.S., which it feels like post-Labor Day. Like it is so busy. High yield has everything too. We have LBO launches that are coming out. Leveraged loans are on fire as well. And we've gotten some repricings for a pretty big name that hit the market this morning. And within high yield too, we saw another one of those companies that was kind of a name that had struggled a few years ago that tapped the market and did a sale in one day that they upsized twice. So it's on fire.
Well, that's incredible too. I mean, you are very close to the ground. You talk to the underwriters, you talk to the investors. Do they think that this party can last, or are they trying to get ahead of something?
It's slowed down a bit today, but I think part of the reason why it's been so busy is we're coming up on Memorial Day, so it's going to slow down a bit. Some people that we've talked to who are on the buy side are saying, like, it makes sense that this rush should be happening now. People want to basically get their orders in. Companies want to go out and issue debt. But more importantly, there's like not a whole lot of clarity right now on what the Fed is going to do. And we've really hit a window right now where companies can find attractive levels to issue debt. High yield spreads are inside of 300 basis points, and they've sat there for a little bit. So it's a good time for borrowers to come to the market.
Well, it's interesting because you were talking about kind of complacency here, just kind of a calm in the market, but next week is CPI as well. So it's kind of like you have to get in front of a few things. If you're worried about interest rates, are investors not concerned, particularly when it comes to high yield and leveraged loans, that there are going to be more cracks in the market?
Sometimes these cracks come up and sometimes there's a pause. And usually when that happens, you're going to see kind of like a pendulum that swings. Like we talk about this a lot, like when we talk to people in private credit. And if there's like a pause in the market, in the broadly syndicated loan market, that's where you can see some of the private credit issuers like kind of come in and fill that void. So usually when there is that pause, it'll take a pause for maybe a week or so and then it'll come back. Like I don't think there's any larger concerns right now about a big freeze up in the market. These blips kind of come up from time to time.
It's interesting because I want to hear more about the issuer that came to market, for example. What's the biggest difference between the stress being felt in the prior cycle that they went and today, where, to your point on volatility, the MOVE index is actually calmer this week than it was for the past few weeks?
Yeah. Well, we have a bit more sense of where interest rates are. So the company that we think is really interesting.
Simple as that.
Simple as that. So Cloud Software Group, which is Citrix, it was a leveraged buyout deal that happened a few years ago. Elliott and Vista Partners had acquired this company, and the debt really sat on banks' like balance sheets. Interest rates were going up in 2022. The banks couldn't really find a level to sell this at, and it just sat there. And they offloaded this last year at a super steep discount. People were kind of like skeptical about the name, like they had to really mark down the price to sell the debt. But now they're able to basically come to market and sell a deal in one day.
Pretty incredible stuff. Once the system starts unclogging, it unclogs all at the same time. That is Bloomberg's Michael Tobin. We thank him so much. And don't forget to catch his story on the Bloomberg terminal. Now, I'm Shonali Basak. That does it for Bloomberg Markets today. Yields lower, stocks up. Stick with us through the close of the day. That does it for Bloomberg Markets. This is Bloomberg.
you feel like this age of abundance over the last few years of just how much was being made?
For my personal taste, I am thrilled at what I get to find every night if I have time to look for something. So I personally don't think too much was made. I think the customer will tell us when there's too much made and they won't watch things. And I think part of the misalignment I talked about before is imagine if things didn't get picked up or movies didn't get made that people didn't watch or go to see. That's how it used to be. The customer decided. I do think there's going to be less made in the middle price range. I think there's going to be more made in the higher price range because when you get to global events like Barbie or Oppenheimer or Super Mario Brothers, it's worth the investment, and it's clear that the audience is there, and they just need to be given what they want. The middle, which ends up, quickly on one of the services in a way that we're watching movies that we don't know how they got made or when they got made and all of that. I think that will probably be curated better, and I hope there's more inexpensive things that give more people the chance to express themselves and have their work seen.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The Biden administration says it may withhold more weapons from Israel. Welcome to the fastest show in politics, as the president promises to delay additional shipments if Israel pursues a ground invasion of Rafah. I'm Joe Matthew alongside Kaylee Lines in Washington. Kaylee, it's great to see you as we wait for word on a potential ceasefire that would change this story in a big way.
Well, sure, because if there is a ceasefire, that would probably put off, at least for some period of time, a actual larger incursion of the Israeli army into Rafah. In the meantime, though, the warnings that we have gotten repeatedly from President Biden and this administration only growing louder. We have long known they did not want Israel to conduct a major operation in Rafah.
Sure.
Now there's a little bit more punch behind those words, perhaps.
Yeah, and there were questions about whether Israel was in fact planning a real ground invasion as opposed to some more limited strikes here. But the message was clearly delivered in a CNN interview. Kaylee, the president went out of his way to make this clear that more weapons would be withheld, that he's not happy about what's happening in Gaza. And the blowback from Republicans has been something. The Speaker of the House says the president had a senior moment.
Indeed, he feels that he is violating the terms of an agreement that was reached between the House, the Senate, and the White House in terms of advancing supplemental funding. It is worth pointing out the weapons that have been withheld, not actually related to the supplemental. The supplemental was all about defensive weapons, replenishing the Iron Dome, and the like. What we're talking about here is a shipment of large-scale bombs that the U.S. was concerned might be used on a population in Rafah. So we're going to have much more on that, and you'll hear from President Biden himself in just a moment. But first, we got to hear from Charlie Pellet, get a check on what's happening in these markets up in New York. Hey, Charlie.
And good day from New York. We've got the S&P 500 index right now above 5,200. Got to keep it locked into Bloomberg Television and Radio to find out where we close today, because now the S&P is at 5,207, just about the best level of the day. We're up by 18 points now, up 0.4%. The Dow up 215, up 0.5%. we've got NASDAQ up 43, a gain there of 0.3%. 10-year 4.47%, with that 2-year now yielding 4.81%. Spot gold up $21 the ounce to $23.30 for the precious metal, a gain right now of 0.9%. West Texas Intermediate crude 79.10 a barrel right now, up by about 0.1%. Earnings news: Airbnb now down by more than $10 a share, down 6.7%. Airbnb sliding the most in a year after the home rental company gave lackluster guidance for a second straight quarter, indicating that growth in travel spending will slow ahead of the peak summer season. So again, recapping, a lot of green on the screen right now, with the S&P above 5,200, 5,207, up now by 0.4%. Balance of power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Limes.
All right, Charlie Pellet up in New York. Thank you. I am Kaylee, back with Joe here in Washington, where the entire town is abuzz about the interview that President Biden gave to CNN last night, specifically in regard to Israel and weapons that may or may not go to that U.S. ally, depending on its conduct in Rafah. Here was the President of the United States yesterday.
If they go into Rafah, I'm not supplying the weapons that have been used historically to deal with Rafah, to deal with the cities, to deal with that problem. We're going to continue to make sure Israel is secure in terms of Iron Dome and their ability to respond to attacks. But I've made it clear to Bibi and the War Cabinet, they're not going to get our support if, in fact, they go in these population centers.
There you have it from the President of the United States speaking to CNN. It was that remark that the Speaker of the House called a senior moment, suggesting that the President was turning back on the agreement that had been made in the supplemental budget request, as Kaylee just mentioned. This is a separate shipment of weapons that, in fact, was not part of that spend. And we want to start the conversation there with Ian Marlowe, who joins us at the table today on Balance of Power, Bloomberg senior reporter covering diplomacy. Ian, it's great to see you. This is clearly an important moment. Is the President engaging in diplomacy here in the public sphere? Is that what's happening?
Yeah, I think so. I mean, I think this is clearly a policy directive from the White House saying enough is enough on Rafah. You know, the U.S. has been warning Israel about this sort of incursion for, weeks and weeks now. And we've seen over the past several months that Israel has been quite comfortable ignoring a lot of U.S., efforts when it comes to humanitarian aid or toning down the tenure of the war, protecting civilians and other things. Nothing has really made a difference. And out there was always the prospect that the U.S. could condition some military aid. And this is the most serious thing the U.S. has done. And they did specifically sell it as something about Rafah. These are big bombs. This shipment was, the shipment that was halted was, 2,000-pound bombs. They're saying, don't use that type of stuff in Rafah. They're still trying to influence that operation. But even though it's being sold as a specific sort of action, the U.S. has also said they're sort of reviewing other weapons shipments. And so to some degree, it's a bit of a muddied situation right now, because on the one hand, the U.S. is saying we're not conditioning all military aid to Israel. But on the other hand, they're saying, watch out, don't do what we've warned you about, because, there's other stuff on the table that we could take off.
Well, and Ian, I feel like we should just be clear about this, considering a lot of the rhetoric now that is surrounding this decision from the administration, including calls from some in Congress for President Biden to be impeached over this. Does the president have the authority to do this? And is there precedent for doing something like this historically when you look back at U.S. policy?
Yeah, I think over the decades, when there has been fierce fighting between Israel and in the Palestinian territories, previous administrations have temporarily halted specific weapons shipments in order to do exactly what they're doing now, which is to up the pressure a little bit, because again, Israel is right there. Gaza and the West Bank are right there. There's a lot of pressure on Israeli officials on security matters, on national security matters, and the U.S. is far away, even though they're the major arms supplier. So I think, the rhetoric is hot right now. I think, from the Republicans, you're seeing something similar to what we saw in Ukraine, where there was a hesitancy in the administration to go with certain weapon platforms or certain policies, and then over time eventually kind of came around, and we're seeing that now now with this policy, they resisted for months, not wanting to condition military aid or halt military aid. That was always seemingly something this administration was never willing to do. And now they've done it and are getting criticized kind of from every flank. I mean, I think on the left, people are saying you should have done this earlier. Why is Rafah any different than other parts of Gaza that have been leveled by Israeli munitions, provided by the U.S. up until now? And on the right, obviously, people are saying, how are you trying to get a ceasefire deal with Hamas, while at the same time saying, oh, Israel, we're going to hold back weapons now?
Well, just another minute on that, if you would, Ian. This is happening while some are holding out hopes for a ceasefire to be announced. We know Bill Burns was back in Israel. What's going on, to the extent that you understand? Is it a serious conversation?
Yeah, I mean, to the extent that we understand it, I think those conversations are still happening, but that Bill Burns is sort of leaving the region. I think, look, it's.
Did we just miss our opportunity?
I think it's definitely. It doesn't seem like it's happening today, tomorrow. I think Israel thought that Hamas wasn't going to get to a yes on the ceasefire without additional military pressure, and that's what the beginning of the Rafah operation has all been about. But it's confusing for an outside observer to see exactly where the sort of U.S. red line is on this. I mean, we've always known that the U.S. has wanted Israel to do something more surgical, sort of a counter-terrorist operation as opposed to some huge invasion of Rafah. But in Israel, it seems inevitable that that's what they want to do, to go in some way, and it's unclear where the U.S. is going to draw the line on that. And right now we have this threat from Biden out there, but it's not clear exactly where, maybe these conversations are happening in private, but it's not clear to us exactly what exactly would tilt Israel over the edge here, in the sense that, okay, this targeted, limited operation in Rafah has now tipped over into something totally unacceptable to the U.S. and they're going to cancel or halt other weapons platforms that they're thinking of sending. So that's a confusing thing at the moment. And hanging in the balance is the ceasefire, which again it's if you push enough in Rafah, the Israelis think maybe you'll get a deal, and the U.S. thinks, okay, if you push too hard in Rafah, the deal's over. There's nothing left, right?
Complicated, to be sure. Ian Marlowe, Bloomberg senior reporter covering diplomacy, thank you so much for joining us. And we want to get a little bit more perspective on these developments now. And joining us is Carmel Arbit of the Atlantic Council, where she is a senior fellow for Middle East programs and non-resident senior fellow. That is, Carmel, always great to have you here on Balance of Power. There are so many different things we could ask you in terms of the implications of this decision from the Biden administration. Surely there are political consequences domestically, geopolitical consequences potentially as well. What does this actually change in terms of not just the U.S.-Israel relationship, but also the way Israel is likely to conduct itself?
This is the highest friction point between Israel and the Biden administration that we have seen throughout the course of the war, but really in the entirety of the Biden administration. I think that the impact that it will have is still unclear, both in terms of whether or not this will be a temporary hold on weapons or whether or not the administration is going to turn around and release them. But ultimately, what we're seeing is that the domestic population and domestic voices in both countries, both the strong far right in Israel and the left in the U.S., are pulling these leaders apart. And that friction is really coming to the fore.
Carmel, I know you're not a weapons expert necessarily, but to the extent that we're looking at this messaging from the administration, withholding, for instance, these 2,000-pound bombs, what would they have been needed for? I guess another way of asking that is, would Joe Biden have withheld the shipment if they were, in fact, considered critical weaponry necessary for Israel to secure itself?
What the U.S. has done in its rhetoric is it has differentiated defensive munitions from offensive ones, where it's saying that it will continue to support Israel, Iron Dome, and other things that it uses to defend itself from Hamas. But in many cases, Israel is using this type of bombs and weaponry to go after Hamas's terrorist infrastructure. So they may be offensively going after that type of military equipment. And so from an Israeli perspective, there's no differentiation. From a U.S. perspective, there's a very clear differentiation in terms of how these are used. Now, of course, something like a 2,000-pound bomb has huge reverberating effects. It would be much less targeted in terms of what it takes out once dropped into a civilian center like Gaza, or in this case, Rafah, where there are more than 1 million people, of whom only about 80,000 have evacuated.
Well, it's important, Carmel, that you kind of make this distinction between defense and offense, because we have seen this before in this conflict, especially when Iran did that unprecedented strike attempting to get into Israeli territory with a barrage of drones and missiles. The U.S. did step up for Israel's defense, helping shoot those down, but made it very clear that if Israel were to retaliate in an offensive way, the U.S. wanted nothing to do with an offensive operation. Just on the subject, though, of Iran, what does this decision from the Biden administration likely mean for Iran or its proxies like Hamas? Does this embolden them in some way?
Yeah, Israel and its supporters have been very quick to point out that not only is this emboldening Hamas in the context of negotiations, where Israel has tried to use Rafah as a leveraging tool to push Hamas closer to Israel's ceasefire position, but it also sends a message to Hezbollah and to Iran that there is a wedge between the United States and Israel. And of course, U.S. support for Israel has been critical in Israel's ability to respond to any of those actors. So this could send a very troubling message to Iran that the U.S. is not necessarily behind Israel in these moments. Something to look for is that this week, the Biden administration was supposed to certify whether or not Israel had been in violation of international humanitarian law in its operation in Gaza as a condition put forward by the Senate to release additional arms. They missed the deadline for that certification. They've said it was not for political reasons. If for any reason the United States fails to offer that certification, we could see what is happening now become much more extreme.
Well, so let's just get to the bottom of this here, because we're hearing a lot of confusing rhetoric in Washington about the president's language, about his decision to withhold these shipments. The Speaker of the House went so far as to accuse him of having a senior moment, suggesting that he was somehow confused about the supplemental that had just passed Congress. Is this, Carmel, a shift in policy, or is this public diplomacy from the White House?
Look, it's too early to tell, because what we're seeing right now is that the U.S. is delaying but hasn't totally stopped these shipments. And we're also seeing that they are reviewing and looking at what is going to happen in Rafah to determine whether or not they would hold back other artillery or other things like that. So it's a little bit early to say. But what you do hear and see is that there had been a sweeping bipartisan support for continued support to Israel from Congress, and the administration starting to take a step back. Whether or not it's going to just be rhetoric in this moment or will have real reverberating effects for the war are yet to be seen.
Well, when we think about the war and its future, Carmel, as Joe and Ian were just discussing a moment ago, there were ongoing, still are, attempts to reach a ceasefire agreement, though the two sides want very different things. Hamas wants this to be permanent. Israel does not. Is that more or less likely now than it was yesterday?
I think as we see all the negotiating parties are departing in real time, we are certainly further away from a ceasefire agreement than we had been maybe even a couple of days ago. That being said, there will continue to be negotiations, and it will continue to be ultimately in the interest of both parties to pursue an end to this conflict. I think the real question is when. For Hamas, they're looking for an end to conflict now that won't require them to release the hostages and won't require them to cede power. For the Israelis, they're looking for the complete military destruction and removal from power of Hamas, and they still have not achieved it. And so whether or not they're able to come to a temporary ceasefire agreement or a permanent ceasefire agreement is going to be a question of timing.
I'm curious your thoughts in our remaining moment here on the role that William Burns may or may not be playing in this. From Cairo to Israel, did he speak with the Israelis about Rafah?
Yeah, so the Israelis have generally felt that Bill Burns has been a strong supporter and a critical partner in these negotiations. But Bill Burns, of course, is a part of this administration. And so it's very likely that the Biden administration has gotten fed up with the Israeli government and some of its internal politics. It also laid out a very clear red line about Rafah. Now, the Israelis still need to decide how pinpoint of an operation they're going to carry out in Rafah versus a much larger scale operation that they are being pressured to take on from their right. Bill Burns is playing an indispensable role in these negotiations, and I expect he will continue to.
Well, it's fascinating following his movements because it gives us a sense of when something is about to happen. Carmel Arbit of the Atlantic Council. Carmel, great to have you back with us. Your insights are important to us as well. The panel is next, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
Good morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show. This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power.
This is Bloomberg. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
It's 1:21 on Wall Street, but you check markets all day long here at Bloomberg. We begin with a headline right off the Bloomberg Professional Service. Apple going to be using its own chips in the cloud to power AI features in 2024. Apple shares right now, they're up by 0.7%. It is an up day on Wall Street. S&P topping 5,200 as data this morning showed a jump in jobless claims to the highest since August, beating estimates. S&P right now at 5,204, up 16, close to the best levels of the day, up 0.3%. The Dow up 209, up 0.5. NASDAQ, the composite index, up 32, up 0.2. The NASDAQ 100 index full of big tech names up by 0.1%. 10-year 4.46% with a 2-year 4.81%. Spot gold up $23 the ounce. That is an advance right now of 1%. West Texas Intermediate crude oil up 0.3%, 79.24 a barrel, and Bitcoin now up by 0.6%, 61,940 on Bitcoin. Designer and marketer Tapestry has cut its revenue outlook for the remainder of the year after a sales decline in North America signaled weak demand from consumers in the U.S., its top market. Tapestry's brands, by the way, include Coach and Kate Spade. Again, recapping, stocks are higher. S&P advancing now by 16 points, up 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet up in New York. Thank you so much. I'm Kaylee Lyons alongside Joe Matthew in Washington, where there's really one story, it seems, is dominating the entire conversation today, Joe, and that is after the U.S. decision to withhold, at least for now, pause a shipment of bombs to Israel over concern that they could be used in Rafah, a Gazan city in which more than 1 million Palestinians are taking refuge. And the administration does not want Israel to conduct a major ground operation there. President Biden last night saying there's more that we might pause if Israel does, as we do not want Israel to do.
It's actually interesting, too, because this particular shipment of weaponry would make dumb bombs smart, essentially. The attachments that you could put on these weapons that might make their destination more precise. Either way, this is the conversation we're having. And Kaylee, the Speaker of the House, thinks Joe Biden is having a senior moment. That was his reaction. Mike Johnson, after surviving an attempted ouster in the House of Representatives, Mike Johnson seemed to be implying, following all of this, that the president was turning or changing policy following the supplemental budget request that became law to send money to Israel and Ukraine. Mike Johnson, I believe he's off script. I don't think that's something that staff told him to say. We should note, Kaylee, that is a different source of funding and a completely different shipment of weapons. That which was in the supplemental will go to reinforce the Iron Dome and some of the other defensive systems. So there are questions right now about how this is going to play politically and whether the president is simply making both sides upset here in the U.S. We assembled our panel for their take on that. Rick Davis and Jeannie Shanzano are with us, Bloomberg Politics contributors, coming, as I mentioned, after this day that Mike Johnson actually survived an attempt at his head. Rick, how do you look at this in terms of the movement from Joe Biden here? Was this, in fact, a change in policy, or is he simply leveraging the media, in this case, an interview on cable news, to try to affect the outcome in Gaza?
You know, Joe, it's a really good question. You never really know whether or not there's a change of policy, a gaffe, or just a musing on the part of Joe Biden when it relates to especially some of this very, very complex foreign policy arrangements. We've seen many times the White House walk back him saying there's no such thing as strategic ambiguity in Taiwan. We're going to defend them with our military. Not exactly the strategy that the U.S. has had for 50 years. And I think the same is true here. I think he is musing that he wants fewer casualties in Gaza, which I believe we all are for. And yet, for the first time, he's putting constraints on the weaponry that we send to Israel, which would be a change of policy. And one that nobody was expecting to hear, I don't think. I didn't get the impression that the administration had really laid out a case for that, either to Israel or to American lawmakers who just agreed to spend this money on weapon systems without conditions attached to them. I mean, there are a lot of people who supported the supplemental for Joe Biden, Republicans in name, who were promised there would be no conditions on Israel. So I don't think it's explainable. I'm betting that it might have been just something he's thinking is appropriate rather than making it an actual determination by the administration. But then again, I could be wrong.
Well, we have heard from other officials in the administration, and including Matt Miller over at the State Department, a person who suggested that there are other weapon systems that they're looking at. The Defense Secretary Lloyd Austin was testifying about this on Capitol Hill. So at least there is some degree of cohesion, it seems. But Jeannie, thinking about it politically, is this a no-win situation for President Biden? Because on the right, he obviously is getting a lot of criticism for this decision, questioning around whether his so-called ironclad support of Israel is in fact ironclad. On the left, he's waited a long time to do something like this, and for many, it probably is coming too late, as there's more than 30,000 Palestinians already dead in Gaza. So where's the win here?
Yeah, you're absolutely right, Kaylee. There is no win domestically, politically on this for Joe Biden. I mean, the best case scenario politically for Biden at home would be a ceasefire, obviously permanent rather than, temporary. But either way would be a improvement from where he is politically. But that said, the idea that this came out of whole cloth or that he misspoke, or certainly what the speaker said last night, is the reflection of somebody who hasn't been listening. The U.S. administration and Joe Biden have been shouting from the rooftops that there is a red line as far as Rafah is concerned. From the left, of course, they're not happy about that because they're saying, rightly so, what's so special about Rafah? Why didn't you draw the red line earlier? Be that as it may, they have said that. And what Lloyd Austin testified, to your point, in front of the Senate Appropriations Committee was the same thing. And Joe Biden repeated that last night. And in your conversation with Ian, you raised a great question. Is this unprecedented? And the answer is no. Ronald Reagan did it. George H.W. Bush did it. The United States presidents do it, Republicans and Democrats, when they are telling somebody in Israel or any country over and over again that this may not be in our interests or aligned with our values, and they are not getting a response. So from that perspective, it's neither unprecedented nor is it a reflection of Joe Biden speaking out of turn, but the reality of a shout to Benjamin Netanyahu to say he was serious when he said, don't go in full-fledged on Rafah at this point.
We're spending time with our panel, Jeannie Shanzano and Rick Davis, our signature panel here on Balance of Power, together for the first time this week with a number of things to talk about. As we mentioned already, Mike Johnson having an interesting 24 hours here, Rick Davis, and I wonder if you see the last day being a win for him as well. He survived an attempted ouster, as everyone projected would happen, by Marjorie Taylor Greene. The motion to vacate, it actually happened yesterday. Ask Kaylee Lyons. She did the whole thing live. The question that I have now, though, is that after 11 Republicans came for his head, more than expected, should Mike Johnson feel safer now or more at risk than he did yesterday?
Yeah, I think it's a really great question, because you would think the victory in and of itself, he saved his job, would be a victory. But you're right. I mean, 11 Republicans voted against his leadership, and that was more, I think, than anybody expected. And maybe they saw it as a free vote, and this way they could go back to their district and show how tough they are with the Republican leadership. Personally, I think it's a much smarter political gambit to show how tough you are with the minority leadership in the Democrat side. But that would just be a seasoned political professionals used to winning campaigns. And I have no idea what the strategy of Marjorie Taylor Greene is as far as electing more Republicans. Doesn't seem to be a good strategy. But yeah, I think if I'm the speaker, I would also be paying attention to the tweet or whatever social media post that Donald Trump posted up, which basically said, hey, congratulations, you got your job for now. And I'm not sure I would thinking, about changing the drapery in the speaker's office right now. I think it may be a temporary post.
Do you see this, Kaylee, the post from Donald Trump?
Yeah.
With a majority of one shortly growing to 3 or 4, we're not in a position of voting on a motion to vacate. At some point, we may very well be.
Yeah.
I thought that he was the reason why Mike Johnson didn't have to worry.
He's had some nice things to say about him. He has suggested that politically it wouldn't pay well for Republicans who are facing a vote in November to go through the kind of turmoil we saw last fall.
Right.
But I wonder if that more is a question of he's betting that the House majority is going to expand after the election rather than turn the Republicans back into a minority. But I'm not sure. Jeannie, how do you read the Trump truth?
Well, first of all, I'm so happy that Rick Davis has joined us in reading the truths. I love it. And, it was a reflection of the reality of Donald Trump, which is that he said Marjorie, or I guess they're calling her Moscow Marge right now, but hold off. This isn't in my interest. And she didn't hold off. And so he said, okay, Marge, you went for it. It wasn't in my interest. I still love you. And maybe we'll do it in the future, which is why I keep asking, why doesn't Mike Johnson go forward and change this rule? He should have done it when they did the Ukraine bill. He didn't do it. I'm holding my breath that he does it so he can save his job. But the real winners here were Donald Trump, who still apparently controls the Republican caucus, and Hakeem Jeffries, who made the case for common sense governing in Washington, which is unusual.
Amazing. Jeannie Shanzano and Rick Davis, I don't even know what else to say. Thank you for a great conversation. Our signature panel here on Balance of Power, the Thursday edition. What could we be talking about tomorrow, Kaylee? It does make you wonder here. One thing we should note is our conversation coming up with a Republican member of the House, Brian Stile of Wisconsin, is going to join us, Kaylee, to talk about this and the way forward. What's left in the agenda? There aren't too many more after we get through this FAA reauthorization. Yeah. Talk about maybe the Farm Bill, and that's about it.
Yeah, everything else might have to wait until after the election. Speaking of things that took everybody by surprise yesterday, not just Marjorie Taylor Greene suddenly calling the motion to vacate, but the House deciding, forget what you're working on, Senate. We're punting the FAA. Right. 1 week extension. We're all getting out of town. You guys have fun.
Good move, I suppose.
So, 2-day work week.
Brian Stile's still here, though. Nice. I think he's joining us from Capitol Hill. So
yeah, so not everyone got out of town.
Stand by.
Fair point.
On that. All I know is I spent an hour on the tarmac waiting for a gate over the weekend, Kaylee, and I don't think that's going to be fixed by this bill.
Yeah, well, unless the senators from Virginia get their way on an amendment vote to make sure no more flights get added at Reagan.
We'll see about that.
Indeed, we will.
Let's get up to date on the news. Before we bring in the Congressman, Amy Morris joins us now in the Bloomberg 99.1 newsroom in Washington with world and national news. Hi, Amy.
Hi, Joe. Donald Trump's criminal hush money trial continues today. They're on a lunch break right now. The former president's lawyers cross-examined Stormy Daniels, argued that she was in it for the money when she took $130,000 to keep quiet about her claims that she had sex with Donald Trump. Now, Trump, on his way into the courtroom.
There's no case. Should have never been brought. Albert Bragg didn't want to bring it. Cy Vance didn't want to bring it, and he didn't. He left. He didn't bring it.
Former President Donald Trump brought Florida Senator Rick Scott to watch today's proceedings. The Senate in a stalemate over how to move forward on the reauthorization of the FAA. Lobbyists are fighting against two amendments in the must-pass bill. One coalition wants more flights added to Reagan National Airport in Washington. And the Washington Post reports the travel industry is working to block an amendment that would regulate the facial recognition technology used by TSA. The House yesterday passed a 1-week extension, giving the Senate a little more time. And the faculty Senate at the University of Southern California voted to censure University President Carol Folt and Provost Andrew Guzman over a mishandling of events around commencement, centering around their choice to rescind the valedictorian speaking slot and canceling the main ceremony. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything.
The biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? It's just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
$1 industry. There's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story. T-Mobile and Verizon are in talks to carve up U.S. Cellular. That, according to the Wall Street Journal, right now, we got shares of U.S. Cellular surging by 15.9%. T-Mobile up 0.7%. Verizon up by 0.4%. Apple will deliver some of its upcoming AI features this year via data centers equipped with its own in-house processors. Apple shares up now by 1%. Stock market on track for its highest close in a month, with the S&P up 20, up 0.4. We've got the Dow up 259, up 0.7. NASDAQ up 44, up by 0.3%. 10-year 4.45%, with a 2-year 4.80%. Spot gold up 1%, 23.33 the ounce, and West Texas Intermediate crude up 0.1%, 79.11 for a barrel of WTI. Recapping, stocks are higher with the S&P holding above 5,200, 52.07 right now, up by about 0.4%. Balance of power continues. Back we go. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, we thank you. Welcome to the Thursday edition, Little Friday, Balance of Power here on Bloomberg Radio, on the satellite, on YouTube, and of course, Bloomberg TV. Alongside Kaylee Lyons, I am Joe Matthew, compelled by the math today, which always gets a little bit dangerous. But the numbers don't lie, Kaylee. In the effort to oust the Speaker of the House yesterday, this is Marjorie Taylor Greene's motion to vacate the MTV by MTG. 196 House Republicans voted to table the motion. 163 Democrats did too. You couldn't have done it without them. But 11 Republicans voted to oust the Speaker of the House. Kayleigh, that's more than many expected, and it makes us all wonder if we're done with this now as we prepare to bring in Brian Stile from Capitol Hill, or if this is going to become part of the new reality where we keep going through this over and over again.
Well, we weren't sure we were going to go through this when it became clear that Democrats were going to stave Mike Johnson if proved necessary. The conversation we were having before 5 p.m. yesterday was, this is an effort on the part of Marjorie Taylor Greene that is dead. And then she surprised us all on the House floor, actually making this move. So what exactly happened here? And perhaps more importantly, what is going to happen as a consequence? Congressman Brian Stile, the Republican from Wisconsin, is with us now. So Congressman, I'm not sure how surprised you were by the move of your colleague last night. Certainly we were taken aback. What should happen now to Marjorie Taylor Greene and her role within the House of Representatives?
This has been a challenging Congress in a narrow majority, and there's a small subset of individuals that would rather throw the House into chaos that allow us to get the work done. 11 Republicans and a handful of far progressive leftists joined together to throw the House into chaos. At the end of the day, we were able to table the motion with overwhelming numbers. And why? Because I think on the whole, Mike Johnson has actually done a very admirable job in incredibly difficult circumstances. Time and again, we hear people saying that we're not going to be able to get it done in the House of Representatives, yet we've done it time and again, whether or not that's the debt ceiling, whether or not that's passing the appropriations bills that spends less this year than last year on everything other than veterans and defense, or whether or not that's moving through other key items like the defense supplemental and making sure that we're standing with our ally Israel. And so Speaker Johnson has done an admirable job. It's frustrating that we continue to have a small subset of members that would rather see us thrown into chaos than focused in on the biggest issues.
I'm going to ask you about a couple of those, Congressman, but I wonder if you're compelled by what Donald Trump is saying publicly about Mike Johnson. We're trying to figure out what he meant with a majority of one, he writes, shortly growing to 3 or 4. We are not in a position of voting on a motion to vacate. At some point, he writes, we may very well be. Do you know what point he's talking about?
I'll let the president speak for himself. He's got a large PR team. My view here is that what we need to be is focused in between now and the election and persuading the American people why we're the party that needs to remain in charge in the House of Representatives. But in a large part, we need to grow our majority. We obviously have a small set of members who are interested in the chaos and in the dysfunction. Many of us would rather get on with the work of the American people on absolutely essential bills, in particular addressing the reckless spending and the broken border that we continue to see plague Americans.
Well, certainly there are a lot of issues that are in focus domestically, Congressman, but also issues in focus geopolitically. Of course, we've seen the Biden administration pausing a shipment of offensive large bombs to Israel over concerns of the way in which they may be used in a full-scale invasion of Rafah. I know that you have put out a statement. You are not pleased with this decision from the administration, but there is precedent for this, sir. This has been done by both Democratic and Republican administrations in the past. What exactly is the problem here?
I think the president made the wrong move in trying to prevent that shipment of weapons that are authorized by the United States House of Representatives, the Senate, and the president himself from being able to be distributed. In particular, at a period of time where we're all concerned about civilians getting in the way, precision missiles from the United States actually allow the military in Israel to target terrorists from Hamas and protect innocent civilian life. So the action by the president is actually a step in the complete wrong direction. We should be making sure that the resources we provided through the defense supplemental to Israel are delivered and allow Israel to complete this war successfully, get the hostages returned, and defeat the terrorist group Hamas.
These weapons, though, the 2,000-pound bombs and the 500-pound bombs, Congressman, were separate from the supplemental that was passed and the president signed, correct? He did make the point in this interview on CNN that we would continue to fulfill replenishing the Iron Dome and so forth. That's what that legislation called for, right?
But broadly speaking, it's the overall funding that is the United States in support of Israel for them to complete the termination of Hamas as a functioning operation and terrorist organization in Gaza. And so when we see these funds going to Israel, it's to protect civilians in Israel, but also the opportunity to make sure that we're allowing the Israeli military to have the highest technology and the most functional, sophisticated weaponry to be able to target terrorists in Gaza and be able to protect civilians. This is literally the exact opposite of what the president should be doing. We should be working to get Hamas to surrender and have them release the hostages, and applying pressure by removing their military capability allows Israel to do just that.
Congressman, I'm wondering, as you're hearkening back to a supplemental package that, again, included defensive weapons for Israel primarily, in addition to aid for other allies, including Ukraine, there is policy in existence in the weapons that we are sending to Ukraine. The U.S. is not supportive of, say, Ukraine offensively striking in Russian territory, for example. There are guardrails around. Why are these two conflicts different in your mind?
Well, the president has some grounds to provide those types of guardrails in his position as commander-in-chief. I'm critiquing him in the decision that he is making because I think it is the wrong decision and not in the best interest of the United States of America. These conflicts are different, and the most critical way that they are is a terrorist group, Hamas, went and captured innocent Israeli civilians, including American civilians, and continues to hold them captive today in Gaza. So the support for Israel is to allow them to simply defend themselves, but also the necessary offensive capabilities to end the terrorist group Hamas and get their civilians returned. That's in contrast with what's playing out in Ukraine.
Yeah. Well, let me just turn that around for a moment, Congressman, because I find this to be a really compelling conversation. Should we consider providing Ukraine with offensive weaponry? Because Russia came into Ukraine much the way Hamas came into Israel. They certainly don't see it differently.
Well, the United States has provided, obviously, offensive weaponry to Ukraine. The question is whether or not that weaponry should be utilized outside the country. We all want to make sure that this conflict does not continue to involve more countries than it currently does. We don't want to escalate the situation. I'm of the view that making sure that the Ukrainian military has the weapons that they need to be able to defend their country, to allow their men and women on the front lines to be able to fight back against an unjust and unprovoked invasion from Russia is appropriate. But I think there are reasonable steps we need to make sure that we're not unnecessarily increasing the conflict in Ukraine.
Congressman, given your role on the Financial Services Committee, I want to ask you about another matter here at home. We just got the announcement from the Senate Banking Committee that the financial regulators, including Michael Barr of the Fed and Marty Grunberg of the FDIC, will be testifying before the committee next week. This is after that scathing third-party independent report into a toxic workplace culture at the FDIC was released earlier this week. Many of your colleagues on the committee have called for the resignation of the chair as a result. But is that the way to fix this problem, sir, or is something else needed?
When you have this level of cultural rot that's occurring at the FDIC, as indicated by the most recent report that comes out, it's absolutely necessary that Mr. Grunberg resign. He's going to come before us maybe on Wednesday if he doesn't resign before and have to answer a series of very difficult questions. This report makes it very clear. The cultural rot at the FDIC goes far down through the management chain. It's clear they need new management at the FDIC, and I'm concerned that the people protecting him are interested because he has a seat at the table as it relates to bank regulation, in particular bank capital standards, as we're exploring Basel III Endgame.
So what's going to happen following this hearing?
Well, ultimately, I think he should resign today. If he fails to do that, I think this hearing will flush out for the American people that he should resign. If he's not, he should ultimately be removed. But this hearing will flush out for a lot of the American people that didn't take the time to read the report yet just how terrible the cultural rot is at the FDIC.
That's quite a statement. Congressman, it's good to see you. Thanks for being generous with your time, as always. Brian Stile, the Republican from Wisconsin, with us here on Balance of Power on Bloomberg TV and radio. I'm Joe Matthew in Washington, alongside Kaylee Lines. A lot to talk about there and to look forward to next week, Kaylee. Can you imagine, by the way, it was 1 week ago that it was 90 degrees here in the nation's capital. There's a lot of talk about climate at the time. Apparently, there should have also been talk about economic impact. The cost of the heat is something that we're talking about today in the new Big Take DC podcast.
Indeed, or at least Saleha Mohsen is. She is our senior Washington correspondent and the host of that podcast. She's joining us now here in studio. So Saleha, especially at a time when we are all laser focused on everything that factors into the U.S. economy, whatever could be inflationary or hit growth, as we're considering the future trajectory of the economy and of interest rate policy as a result, how does climate factor in? Heat,
Heat is bad. It's all what small businesses are dealing with the last few summers. In 2023, from June to August, we saw record levels of heat across the 50 states. And there's a new government report that says this coming summer is going to be just as bad, if not worse.
Oh, boy.
More than half the country is going to see higher than normal temperatures. And not just Texas, where it's always hot. We're talking about Portland, Maine, and Nebraska, and Ohio, and California.
Well, you got me at the cost of a lobster roll doubling, because that goes straight into my heart. But now that you have our attention, where does Washington come into play here? Does this confound the Fed? Does this make it impossible for the administration to forecast when it comes to the economy?
This hits Washington a couple of different ways. Yes, the Fed, because when you're talking about inflation, electricity costs are something that are on the rise and are a huge burden on households and small businesses, large businesses. But let's talk about 2024. Biden is facing a lot of questions and struggling to persuade people that he's done something for the economy. Our own Bloomberg polling that we do with Morning Consult shows that more people trust Trump in swing states when it comes to the economy than Biden. But if we're about to have a summer just before Americans vote, where small businesses have a multi-billion-dollar impact on their costs because it's so hot they can't keep ice cream cool, and they can't sell lobsters because they've had to double the price because seas and oceans are too warm to have lobsters. This is a problem. On that podcast, I did talk to a Dallas Fed economist, Emily Kerr, who did a really deep dive into this with a survey. Listen to what she has to say about how this hurt manufacturers.
Their lost revenue came from lower productivity, lower labor productivity, temperature-sensitive work sites. And so these manufacturing companies were having to give workers more breaks, provide a lot more water, maybe pull back from outside and sort of exertion roles whenever it was so hot.
So just looking at Texas, where it's already so hot, when you have 45 days of 100-degree plus weather, that's a record. And small businesses faced a $9.5 billion hit from that. Texas makes up a lot of the American economy. And then you're talking about a lot of states having hot temperatures.
It's funny, you were talking about how voters are waiting to see if Joe Biden can make good on promises. I thought you were going to say the climate. You said the economy. Where are young voters on promises to manage the climate when we see, for instance, the headlines on an LNG pause, for instance? Is he moving in the right direction when it comes to young voters who see that in many cases as a single issue?
It's a complicated issue because as much as you want to focus on climate and address this on a national scale, you have to work globally and have partnerships. The U.S. and China struggles in a lot of areas in terms of coming to an agreement or having common ground. Climate is one of them, but that relationship is still facing a lot of trouble. So there's the world's two biggest economies can't really come together easily to do anything on climate. The other complexity there is geopolitical status. If we are still reliant on oil, but also still need to power up our defense spending, nuclear program, where does that fall on the spectrum of climate change?
Yeah, well, especially if you're trying to transition into a clean net zero economy, you're still going to need traditional energy sources in the interim period of time. It can't just happen overnight. This is such a fascinating point of discussion. Really great to have you. Saleha Mohsen is the host of our Big Take DC podcast. You can, of course, find that wherever you get your podcast. It drops every Thursday.
Yes,
subscribe while you're at it. You can subscribe to the Balance of Power podcast as well. The other thing to think about, Joe, when we're talking about climate and economics is that lower income communities often feel the effects of heat, for example.
Right.
To a much larger degree than others because they live in areas, especially in urban areas where there's not as much tree cover, things of that nature. There's so much to consider in this conversation.
Well, that's for sure. I'm really looking forward to hearing it. We get our sneak peek here on Thursdays, but the podcast is just about to drop, and we'll put an ear on it because you're right. These are the very voters that Joe Biden needs to reconstruct his victory from 2020. Saleha, great to have you, and thank you as always. We've got a lot to follow here, Kaylee, as we hand the baton to New York in a special edition of Bloomberg Business Week with Carol Masser and Tim Stenovic. They're live at the Bloomberg Tech Summit in San Francisco. That's where Joe Biden is today.
Yeah.
Or will it be?
California after Wisconsin yesterday.
Yeah.
Everywhere but Washington, apparently. Don't worry, though. Joe and I are still here in D.C., and we'll see you later on Bloomberg Television and Radio.
leadership are on Bloomberg.
The ultimate goal of doing away with the central bank still stands. The discussion regarding the central bank is primarily moral in nature. The way we see it, there has been a cultural change in Argentina. Today, wages are miserable, not through our own fault. That is due to 20 years of populism. Argentines have understood that populism is no solution, and that the quick fixes they sold to them during the last 100 years, both the criminal politicians and criminal economists, they were all false. And we need to opt for a pure orthodox market-based solution. And that's what's going to make us succeed. And that's what's underway. In fact, there are already indicators today that show that activity in the agriculture sector, in the oil and gas sector, in mining, well, our economy is recovering strongly in those departments. There are indicators that point to the fact that Argentina could really make a strong comeback.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything.
This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. Live on radio, TV, on YouTube, Bloomberg Originals. We are not in New York. We've got a special edition.
Yeah, we're out here in San Francisco at the Bloomberg Tech Summit. I got to say, it is just a beautiful, beautiful day here in San Francisco.
And I have to say, walking into this venue, man, it's everybody and anybody in the world of technology. And we're going to be hearing about, yes, AI, but so much more. Hey, coming up, first of all, a lot of important conversations already happening up on stage.
Yeah, right now we're hearing from Chris Cox, the Chief Product Officer over at Microsoft. He's on stage downstairs here at the Bloomberg Tech Summit. We already heard from former WeWork CEO Adam Newman all about his new project, plus much more great speakers coming up a little later, including Reid Hoffman from LinkedIn and PayPal.
Just a few important names. Also coming up is Aileen Lee of Cowboy Ventures. Man, why we matter, why she matters is she's really understanding what are some of the companies to invest in for the future. She also coined the term unicorn, so I'm curious about what she sees as the unicorns of the future.
I'm also curious to get thoughts from our own Brad Stone. He's the editor of Bloomberg Business Week. He's right here. You can't see him yet. We're not going to him yet, but he's going to give us the lay of the land here at the Bloomberg Tech Summit and really talk a little bit about what went into planning this and what he hopes that attendees get out of it.
I want to know when he talks to Amica. That's what I want to hear about. I want an Amica
for my home. It's a humanoid robot, by the way, so.
All right. Hey, listen, folks, we've got stocks headed toward their highest level in about a month. So let's head back to New York headquarters and our own Charlie Pellet. We got to get a check on the trade today.
Thank you very much, Carol and Tim. In fact, best level of the day just about right now on the S&P, 5204. Perhaps the key takeaway there, we're holding above 5,200. Got to keep it locked into Bloomberg Radio and Television to find out how things shake out at the closing bell. But again, worth repeating, 5204 on the S&P, up right now by 0.3%. Highest level in a month, adding to a rebound. rebound that has been fueled by speculation, the Federal Reserve will cut rates this year. The Dow up 250, now up 0.6%. NASDAQ up 30, higher by 0.2%. 10-year 4.45%, with a 2-year that's yielding 4.81%. Spot gold up $26 the ounce to $23.34 now, higher by 1.1%. And crude, little changed, up by just under 0.1%, 79.06 a barrel. After earnings, we've got Airbnb dropping by 7%. After earnings, ARM Holdings down now by just about 1.8%. So again, S&P 500 index 5203, up by 0.3%. I'm Charlie Pellet. Back we go to the Bloomberg Tech Summit. Once again, your hosts Carol Massar and Tim Stenovec.
Hey, thank you so much for that update, Charlie Pellet. Really do appreciate it. Once again, Carol Massar and Tim Stenovec live here in San Francisco at the Bloomberg Technology Summit. And fair to say, Carol, we've already heard from a great lineup of speakers. I mentioned Flo's Adam Newman, formerly of WeWork. Fei Li, they call her the godmother of AI, yeah. And she's also a professor. Heard from her a little earlier. Snap CEO Evan Spiegel, also here at this event. We got a great lineup.
It's really fun to see the networking going on. We've also got our own star, and we're talking about Brad Stone. He is the editor of Bloomberg Business Week. He's also, of course, the author of numerous books, including those on Amazon, Amazon Unbound, and so much more, joining us here at the Bloomberg Tech Summit. Actually, you have invited us in, so thank you so much for that. First of all, I feel like there's so much going on AI, yes, but tell us about, Brad, the conversations you guys had as a team about what you wanted to cover here.
Yeah, you know, it's funny. We do these every year, and we try not to repeat ourselves. And last year, we were really talking about the emergence of ChatGPT. It had gotten everybody talking. And so, of course, we had Sam Altman as our keynote speaker. And you can't invite the same people every year, but the other thing that's happened is it has started a movement. And so we thought, well, who else do we want? And the first names that sprung to mind are the founders of Anthropic, siblings, Dario and Daniela Amodei. They actually worked at OpenAI and spun out, maybe with an implicit objection to how OpenAI was being run. That's where we started the day, and it's really set the tone for the conversations today. You mentioned Fei Li, we have Vinod Khosla, Reid Hoffman coming later. Really, I think where we settled on was like, let's find some of the architects of this moment and ask them the hard questions about, are we really kind of comfortable where we're going, or is this an arms race that is propelling everyone forward just to win? And what does that mean?
So what does that mean? Because, you know, if we think about where we were a year ago when everybody was playing with ChatGPT, GPT-4 had basically just come out a little over a year ago when you had the Tech Summit here. Where are we this year with the run-up in NVIDIA? You have Amazon investing in Anthropic. You have all the OpenAI drama that happened at the end of last year. Where are we when it comes to sort of like AI being in prime time this year?
Yes. I will answer with something that you will never hear on the stage downstairs.
Okay.
I don't know. We are in an age of remarkable, what I call AI ambiguity. There's so many things we don't know. So, for example, Meta has open sourced the Llama 3 model. What does that mean for these other companies that have spent hundreds of millions, maybe soon billions, to train and operate a model? What does it mean that you can now get the technology for free? Will chatbots be a thing that we regularly use, or are they a novel expression of the technology and then they'll fade away? Are there lanes for startups outside of what all the big tech companies that have the resources are doing with AI? These are great questions. I actually don't think that anybody has the answer. I think that even when I think about social media explosion or on-demand apps fueled by the iPhone, that we sort of had a sense of where, okay, well, this is cool, and people will find it useful. And I just think everything from how we'll use it to what the economics will look like are still completely up in the air.
I love that you went there, because I do feel like we've all been agog, if you will, right, on NVIDIA and the chips and so on and so forth. Coming off of Milken, I just came, and people too even are like trying to assess where do we allocate the money going forward. So much of what I heard, Brad, was data centers, right, and infrastructure build out. Like people were still like, we haven't quite figured out the applications of AI going forward.
I think that's true. Where I'm sort of bullish, and let's use an example of the good old Bloomberg terminal, where you really need to know how to get information from the terminal, right? We know a whole lexicon, and that's pretty similar to other computer systems. They'll do what you tell them to do, and often you need to speak a particular language, maybe even coding. And what AI is, I think of it as like a new user interface where you can express yourself either with a voice command or a written command in a plain language and have it respond and have it do things for you.
Yeah.
I think that as like, and I think we're going to see at I/O next week with Google and WWDC with Apple, them baking it into their devices and basically creating a new way to use technology.
Is it too early to say, Brad, that we're in an era right now like we were with the web browser in the 90s, sort of the dawn of the internet? You know, tech bubble notwithstanding, but the idea that there was this new technology that fundamentally changed not just the way we live, but the way we interact with each other and the way that we spend money.
I'm going to go back to my handy AI ambiguity and say, I don't know. I mean, if this is the domain of only the biggest companies that can afford it and their proxies, like Anthropic, then maybe it isn't a giant sea that lifts all boats. Maybe, you know, this is going to be owned by 4 or 5 companies and governments around the world, and it will concentrate their power. The arrival of the web browser was the arrival of all sorts of entrepreneurial opportunity. To your point, you know, we had a rise and then a crash and then a rise again. I don't think it's clear that this is ready, set, go for everyone. It's very expensive to run these models. They'll maybe regulated, as Fei-Fei Li said earlier today. If you regulate them, you could create a powerful black market based on open source models. So all sorts of sort of unresolved issues. And I'm just not sure, despite the fact that you go to Y Combinator, any startup community here, and all you will see and hear about are AI startups. I'm just not sure how big the opportunity is going to be. We'll see.
Hey, Adam Newman, you know, you think about cycles, right, in technology, and we're trying to still figure out, right, the AI cycle going forward. But what did you want to know, or what, you know, Adam Newman, in terms of, you think about WeWork, how it was a cover of Bloomberg Business Week, maybe several times, I can't remember.
Before Brad's time.
Yeah. Before Brad's time. But nonetheless,
it was a great story.
We talked so much about that company and where it was going, and obviously it's gone through its things. What did you want to know?
Well, first of all, I felt so privileged to be able to bring his particular brand of charismatic lunacy. You know, I don't mean in a harsh way. You know, he's entertaining as heck. You know, like he exudes charisma. He's at it again. He's trying to buy WeWork out of bankruptcy.
Right.
So that was the first topic. They've not taken his bid, and he was clearly signaling that he's going to appeal. That they think that the creditors should have looked at his bid more carefully. That he had the higher bid. He said that the current creditors who won the deal are making promises they can't keep. So that was the first topic. Then we asked about Flow, his residential real estate company. You know, this idea of spending hundreds of millions of dollars to acquire properties and then not just be a landlord, but to use technology to create community and a sense of belonging. It's Adam bringing his classic sense of, quasi-mysticism into the world of business. And I was like, why do you keep doing that?
It sounds a lot like WeWork.
Yeah, why do you keep doing that, you know? But it's who he is, and he's somebody who speaks from the heart. I asked him a little bit. I wanted to know about whether he was different. And I really do get the sense that, one, he's got a confrontational board now.
Yeah.
That's going to say no to him. He didn't have that before. And that, two,
there's a couple adults in the board.
Well, there were before, but maybe they weren't acting like it. And that he even said that on his latest proposal, Mark Andreessen told him no. Yeah. So that's interesting. I'm not sure Masayoshi-san ever told him no. And then the third thing was I wanted to know from him how he was different as a CEO. And he mentioned the board, and he also mentioned advice that Jeff Bezos had given him to always talk last in a meeting, because otherwise you're going to kind of pollute the water and sway people's opinion. And I said, are you able to follow that advice? Because, and his CFO was sitting in the audience and gave us a kind of half-hearted thumbs up. So maybe something to work on.
So do you see him pulling off the WeWork out of bankruptcy?
I don't know if he will win that deal. I think that the creditors are are required, and it is in their personal interest to get the most money for the debt that exists and to bring the company out of the bankruptcy. And the fact that they've chosen this other path suggests to me, and I haven't really looked at it, but that it may be a more complicated picture that Adam has presented, and that it may not only be about a popularity contest. And I also asked him to explain to me why WeWork should be in flow, and whether it was just a personal mission of redemption. And I wasn't sure I really fully believed that those two companies belong together, and that it wasn't a little emotional for him. In fact, he said that it was.
Yeah.
So, and maybe there are personal reasons. The question that they don't want to resell WeWork to Adam Neumann, we can all imagine what they are. He wasn't, the company had problems under his leadership, and the question is, are those personal reasons, do they meet a valid legal test?
It's fascinating if you think about the pandemic and how we're rethinking how we work and what kind of office space is ultimately needed. Like, his thinking about this concept of having flexible workspace, like as you need it, wasn't so far-fetched. It's just timing and maybe execution. And
I would say this. I think that the history of real estate is Donald Trump as Exhibit A is a history of ups and downs, bubbles and crashes. We're seeing it in China right now. Business Week, we did a list of all the billionaires that have lost everything betting on the Chinese. So that's no different. The difference is he wrote it a little higher, wrapped in a mantle of being a technology company and trying to take it public as a tech company, and then wrote it even lower because investors ultimately didn't buy the vision.
Can we talk about Ameca?
Well, it's the humanoid robot.
I am obsessed.
Yes. This is a humanoid robot developed by Engineered Arts, a company in Cornwall, England. I'm about to go in either a career high or a career low.
You're good with this
I'm
kind
going
of
to go
stuff.
on stage and interview the robot.
So it's going to answer your questions in real time?
Yes. Yeah. It's creepily human-like. It speaks, and I presume should be addressed as a female. That's a choice. It's really remarkably, I wouldn't say it's lifelike, but because I did some tests, it's expressive, and it's designed to make people feel comfortable with it. To me, even though it's a British project, it very much reminds me of the Japanese bipedal robots of the past. Sony and Samsung, and they were always working on them. The Japanese love their bipedal robots.
It's certainly it's an incredible novelty, but we should note that there are lots of companies working on robots like this to help in warehouses. Think about what it would do to a company like Amazon to be able to have, pickers.
This Ameca, I hope at least, does not move. Because if you see me running across the stage, I don't know that it's an ambulatory.
Not yet.
Now, I did ask, and it's running ChatGPT 4 Turbo.
Right.
So I think that's interesting.
So explain what that means.
That it's
POS essentially.
Yeah, that Engineered Arts has developed the machine, but the brains are borrowed using the API of OpenAI and ChatGPT. Well, that's interesting going forward, that maybe robot makers don't need to worry as much about main general intelligence, that they could hook into one of these large models, use the API, and they can be more engineering companies that think about things like how the joints work, how balance works. As you mentioned, Carol, the expressiveness of the robot.
So wait, does that mean she's not connected to the cloud right now?
Oh, I would imagine that she is.
Okay.
Yeah. Well, we'll see if Wi-Fi goes down.
Yeah,
we'll see what happens.
But she doesn't answer.
Just make sure she's on the right network, okay?
Exactly.
I was thinking, Tim and I were talking about the hotel we're staying. We're not going to say where it is, but it's like, right, we couldn't get anybody to answer the call. So we could have used Ameca to answer our phone call and help us answer some questions.
There is the RSA conference happening here in San Francisco right now, which is huge.
Yeah.
So, yeah.
Well, that's the thing. It's you wouldn't need Ameca to do that. You would need an Alexa or a ChatGPT.
Right.
And then robots can just be these physical things. And the question is, do we really need a bipedal robot that's trying to trick us into thinking that it's human? Or will they be, Tim, you mentioned industrial robots, little things that do very specific tasks, deliver the mail, deliver packages, that kind of thing.
Hey, can I ask you what's the biggest, I don't know, I know AI like as you go through today, like what are you looking for a question to be answered or something? Like I think you know so much this world. Is there something top of mind for you?
I mean, I think we all want to know like where it's going. I guess specifically, we've seen since the September of 2022, every successive model of ChatGPT or any of these other chatbots has been step change improvements fed by more and more data and more processing power and money running on NVIDIA chips. So my question is that going to continue, or are we hitting a natural limit either in the money that we could spend to train the available processors, or just the model maxes out, and it's not giving us step change improvements anymore?
Good stuff from Brad Stone as always. We've got more, including we're going to continue with AI, folks. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Kayleigh Lyons deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing very close to session highs right now on the S&P 500 index, holding at 5205 above 5200. Right now the S&P up 0.3%. Dow Industrials up 254, up 0.7. We've got NASDAQ up 30, up by 0.2%. 10-year 4.45% with a 2-year 4.80%. Gold up 1.1%, 23.35 the ounce, and West Texas Intermediate crude up 0.2%. WTI 79.12 a barrel. Bitcoin up 1%, 62,155 on Bitcoin. Apple is going to deliver some of its upcoming AI features this year via data centers equipped with its own in-house processors. Apple shares are right now up by 0.8%. And sources tell Bloomberg, Google parent Alphabet has been progressing in talks to acquire marketing software provider HubSpot. Alphabet shares down 0.3%. HubSpot now down by 0.1%. Recapping, S&P up 15 to 5203, up by 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, as you just heard from Brad Stone, no doubt about it that artificial intelligence is definitely front and center here at the Bloomberg Tech Summit. We've heard CEOs from Anthropic, Hugging Face, Pika Labs, execs from Meta and OpenAI all taking center stage, really to talk about the opportunities, the concerns, the hazards, all of that. It's what happens when you innovate.
Yeah, it is. And you know what? Rachel Metz has seen this all firsthand. She's been covering AI for longer than we've even known about ChatGPT. I mean, going all the way back to 2018. So she's had a front row seat to all of this, especially over the last 18 months, as we've seen it really just take center stage, not just on Wall Street and not just in Silicon Valley, but I think fair to say in everyday life, or at least that's the hope for these companies developing it. Rachel Metz is artificial intelligence reporter for Bloomberg News. She joins us here from the Bloomberg Tech Summit. So Rachel, I'm just trying to get an idea for where we are when it comes to this quote-unquote AI revolution. If you were to describe this like a baseball game, what inning are we in?
Ooh, I would say that AI has been around for a long time, longer than probably a lot of people have been thinking about it. But as far as the evolution of it, if we use a baseball analogy, I'd say we're still in the very early innings. A lot has been learned. We know a lot about machine learning and how that works, and come up with different ways to create AI systems. But I think almost everybody would agree this is still the very early stages of figuring out how to make machines do what we want them to do, learn from data, that sort of stuff.
Well, it's so interesting. We've had conversations with you to kind of understand, where's the exuberance and where's the kind of reality. Because, yes, AI has been around for a long time. You talk to the financial community, right? They talk about it. They've been using it. This is, though, generative AI. It's taking it to a different level, right? So make the distinction for our audience again about why this is a whole new ballgame.
I mean, I think what we're seeing now is some of it is a technological shift and technological advancements. I think a lot of it is also a mind shift, right? You've got people, I think the average person is starting to understand more about how this technology could be used in their everyday lives. With something like ChatGPT and some of the other generative AI tools, you're able to more personally interrogate these things. See if I type something in and I get back an image, or I get back a chat that sounds convincingly human, you're getting more of a sense of what you might be able to use this for. Whether that's something good or something bad, that's a whole other debate, right? But I think that people are sort of understanding more how this could impact them, and that's a big shift than in the past when it felt more sort of under the surface, and people like me would be keeping an eye on it, but it might not be something that everybody was thinking about a lot.
I mean, I must confess, I'm not totally convinced how it's going to impact my life. I mean, I've talked to executives from Verizon, for example, who say, okay, we're able to go through and understand what people have questions about and develop products and services to answer those questions, because we can take all of these questions that they've been asking and create answers for those questions. That makes sense to me. Taking all that data, understanding what we're calling about. But what else is the promise out there? What do you see as the impact?
What do I see? I mean, I think that what we're starting to see is a lot of tools that people could use for filmmaking. I've been writing a lot about tools for videos and filmmaking, music, things like that, maybe personal assistant type stuff, which some people are really excited about. If it could automate some tasks or make it easier to do certain things related to work, things that people aren't that excited about doing. I I could see how that might be a positive in the future, but right now I feel like there's still like a lot of proving out that needs to be done.
Okay, I want to go to Apple.
Yes.
I thought you were going to go to songs.
No.
How Taylor Swift could have maybe used AI on her latest drop.
No, I think what's great about Taylor Swift is that she's a person and that she's writing this stuff, okay? So,
but they could get an assist.
The talk of Twitter and Threads this week is this new ad from Apple for the iPad. And it just like couldn't have landed any worse. It's the idea that they're crushing creativity, instruments.
Interesting.
It's pretty remarkable. We have some images of it up right now. You can see a crushing piano if you're listening or if you're watching this on TV. Let's just say it didn't land the way that Apple wants it to land. You have a story out that talks about music being produced using AI, music being written using AI. Isn't there something lost when we rely on computers to do things that... I mean, do I sound like a Luddite here?
No,
Am I crazy?
I don't think you do at all. I mean, I agree with you on the Apple ad. Like, I understand what I understand what the message was they were trying to get across, and it like totally failed. At least for a certain segment of their audience who was mad. I also was like, what is this? This is not cool. As far as the music stuff, I mean, I think it depends on a few things. It depends on how you're using it, what you're doing with it, what your aims are. On the one hand, I see how it could enable a lot more people to make music. And how it could be used as an additional tool for musicians and people who are mixing and editing music to enhance music they're already making. But on the other hand, yeah, I can see there's some really serious potential downsides. If like really crappy AI generated music is flooding a service like Spotify, people will be mad. And also you then start to just see like the quality degrade of this stuff, and people might say, well, what is the point of all this? There are also a lot of copyright concerns that this stuff brings up as far as what it's trained on. So I think in the next like few months, in the next year or so, we're gonna see where things land on that. I think some of these companies and record labels and music stakeholders are talking to each other. We know the record industry is pretty historically litigious, so we'll see. Maybe they'll come up with some agreements. Maybe there will be some lawsuits. Maybe both.
Yeah, you do wonder who owns it, like in an AI world, because it's coming from data that's out in the universe that might help you create.
That's a really good point, because if you think about what Reddit was so excited about with its IPO was that they had this data set that they can license out to get trained on.
Right.
Could music publishers, rights holders, license those songs and have a different revenue stream by doing that?
In theory, yeah. It's really complicated because of the way the music industry works, and there are a lot of different stakeholders and holders of licenses for different pieces of the music publishing pipeline. So I think it's going to take some time to shake out. There's also a bunch of copyright suits already winding their way through courtrooms related to other generative AI companies like Midjourney and Stability AI. So you could certainly see, you also could see, one of the legal experts I talked to said it's possible that a judge might say fair use applies to training data for certain kinds of media, but not others. So perhaps fair use would apply for generating images, but maybe not for generating music. And I think it's going to take a long time for all that to shake out.
So innovation, great. AI, we'll see.
We'll see.
But also lawyers, they're going to be busy. All right, I want to get to, it's the new issue of Bloomberg Business Week. It's a special issue. It's all in on technology. And one of the neat features is you guys identify kind of the leaders that we need to be watching, or the leaders for tomorrow. And some of them might be a little bit already established, some of them maybe not. And that's kind of what this event is. It's names you're going to know and maybe names you should know. So tell us about some of how you guys came up with that list.
Yeah, so one of the names, and this is someone I've spoken to a few times for stories, is Demi Guo, and her company is called Pika. And Pika does generative video. So you type in a prompt and you can get a video. And one of the cool things that they're doing is they keep adding on these different features to their video products. So like they added sound effects, because if you think about it, if you're generating a video right now, you're just generating a silent video. There's no sounds with it. So like you could have a sizzling sound, like bacon sizzling in a pan.
Cool.
Yeah, it's kind of neat. And they added something just the other day, styles. So you can generate a video in a certain kind of style. Stuff like that.
How is it different than something like Sora from OpenAI?
Well, it's already something people can use.
Because they're holding Sora back.
They haven't set a release date for it yet, as far as that's...
But they've shown off what it can do.
Absolutely. But my understanding of it is it still takes quite a... It can produce very high resolution videos, and they're pretty lengthier than what other people are doing. But I understand it's quite expensive, and also it's quite slow. In general, generating a video is pretty slow at this point. Because if you think about generating an image, that's not very slow, but then think about how many chunks or frames, depending on what technology they're using to do it, it's going to take a lot longer.
So no musicians, no filmmakers.
What?
No musicians, no filmmakers needed.
Well, you know, it's so
no, we need them. These are just tools.
Oh, okay. Just making sure.
I keep telling you, I'm just coming off of Milken, and one of the discussions were that there were a lot of people saying that what are the jobs that are going to be lost because of AI? And we keep hearing, no, it's going to be adjacent. People are going to be working alongside AI. How are you thinking about that aspect of it?
I mean, it's tough. On the one hand, I feel like it's really hard to know. I think what I suspect, I don't know this for sure, but I suspect what we may see is what looks like some job loss. We've already seen certain job losses that are either attributed to AI or said because of AI. I wouldn't be shocked if some people end up getting hired back,
right.
At least in the short term, because companies realize, wait, this is not, as far as I can tell, I don't think anybody can be replaced by AI at this point in time. I would be very, very surprised by that.
Is there anything out there that really excites you right now?
Oh my gosh, what an open-ended question.
It's a good way to end.
You can go anywhere you want.
No, I mean, I'm really interested in seeing how there's a lot of talk about data and is there more data? Do we have enough data to sustain, these larger and larger models? And I'm curious to see where more data comes from if we start using synthetic data, the goods and the bads that could come with that, and also if we start seeing people working on new types of AI models, building them in different ways. That's something that I've been looking around for and seeing a couple companies working on that. And that I think is interesting. Because just like we have all kinds of buildings, different kinds of building architectures, so too can we have different kinds of AI model architectures.
The idea that there isn't enough data makes me...
Yeah, me too.
Right?
Yeah.
In this data, intensive world, it's kind of crazy.
Well, we have produced data right here by talking.
Exactly. We created it. We own it.
We own it.
Rachel, we always appreciate it. You really do get through a lot of the static and explain AI. Thank you so much. Rachel Metz, who follows AI for Bloomberg.
Hey, from San Francisco to Washington, D.C. for a check of latest world and national news. We got Amy Morris on by. Hey, Amy.
Hi, Tim. Israeli Prime Minister Benjamin Netanyahu says his country will stand alone if it has to in its war against Hamas, threatening to deepen a crisis in relations with the United States. This after President Biden had warned that he will stop additional shipments of offensive weapons to Israel if the country goes ahead with the ground invasion of Rafah in Gaza. Now, some Republican senators say they're crafting a resolution condemning the Biden decision to suspend shipment of those weapons. One of the senators is Republican Lindsey Graham of South Carolina.
It's a horribly bad decision and dangerous because it does put the hostages more at risk. It makes the war go on longer. It emboldens Iran at a time they need to be contained.
Democratic Senator Chris Van Hollen disagrees, saying that emboldening the enemy is not likely.
This will not embolden Hamas in any way. What it will do is make it clear that as you go after Hamas, don't create more civilian casualties.
Van Hollen says Hamas benefits from the humanitarian crisis. In court, adult film actress Stormy Daniels on the witness stand in Donald Trump's criminal hush money trial. Trump's lawyer told the judge that the defense plans to renew its call for a mistrial based on Daniels' testimony. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Season 2 of The Circuit. We're walking with the titans of banking.
You guys love these meet and greet things.
Me too. And driving a warship through the Pacific.
You're not the typical Silicon Valley founder wearing a black turtleneck. Like, how does that play?
I am a little bit of a caricature.
Taking you around the world.
So we're kind of in the middle of nowhere. It's incredible that this is the site of the biggest Netflix production ever in Latin America.
and getting you closer to tech and business leaders like never before.
You have our money. You've got world leaders on speed dial. That's a lot of power.
Sometimes I think I'm just riding the Bronco and hanging out for dear life.
You driving a Hummer is pretty badass.
That's what I'm going for, like badass soccer mom.
I'm Emily Chang, your ticket to the front lines of tech, innovation, culture, and host of The Circuit. Wednesdays on Bloomberg Originals and Bloomberg TV.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffman arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffman also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks continuing to advance with the S&P 500 index now at 5209, just about the best level of the day. S&P up 22, higher by 0.4%. Dow Industrials up 293. That is a gain of 0.75%. NASDAQ up 46, higher now by 0.3%. 10-year 4.44% with a 2-year that's now yielding 4.80%. Spot gold up $27 the ounce, up 1.2%, while West Texas Intermediate crude up 0.4%, 79.34 a barrel. Stock market on track for its highest level in a month, adding to a rebound that has been fueled by speculation that the Fed will cut rates this year. A government watchdog will audit the FAA's oversight of maintenance practices at United Airlines after a series of mishaps involving the carrier. Shares of UAL, they are down today by 0.2%. Recapping, the S&P just about the best level of the day, up 22 points now at 5209, up 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, thank you so much for that update, Charlie Pellet. Silicon Valley, no question, buzzing about AI. We've been talking about it, but venture capital deal making, Carol, it's still suppressed. I got some stats here. Here's some numbers, okay? Yeah. Here in the U.S., VCs poured $36.6 billion into startups in the first quarter of the year. That's according to PitchBook. The funding went to 2,800 companies. On both measures, it's a nearly 30% decrease compared with the same period in 2023. So the takeaway is startups had their worst funding year last year since 2019. This year, it's starting off even worse. So despite all the excitement.
Well, we've got a great voice to really talk to us about the startup community. Aileen Lee is with us. She's the founder and managing partner of the VC firm Cowboy Ventures. They invest mostly in software companies based here in the U.S. And we should say that her firm has made more than 100 early-stage investments, specializing in seed rounds. She's on site with us. The other thing is she has done the data analysis that is the reason we use the word unicorn when it comes to startups. We love data here at Bloomberg. How are you?
I am so happy to be here.
Well, tell us about the VC world. Like, give us an idea. It's a great indicator in terms of the health of the economy.
Yeah, so we just finished a panel, myself, Kirsten Green, and Ade from Base 10 with Tom Giles, who's the tech editor for Bloomberg Tech, and we talked about what's going on. So, like you mentioned, we had a big slowdown last year. A lot of people put their pencils down. They're both, like, it felt like there was a falling knife in terms of public markets, which obviously affects the private markets. And so people said it's not a great time to be investing in private companies. I do think that we're seeing quite a pickup this year, but it's largely driven by AI, which is great. It's very exciting. It is the new hotness in venture capital. So you just have to, it can be quite treacherous, I think, to invest in AI right now because it's, you know, obviously there's a lot of energy right now. We're kind of in a consolidation phase, and for very good reasons, right? Whether it's Microsoft or Meta or Salesforce or ServiceNow or Google, you need a lot of, and OpenAI, you need a lot of money, you need a lot of GPU, you need a lot of engineers, and so there's kind of this like tectonic plate war going on in the big tech players right now. And so if you've got a really big fund, you could try and align your, obviously most of these companies are public companies, right? So it's a great time for NVIDIA, AMD to be a public markets investor, to be able to get exposure to the AI that is going to be powering, I think, most applications for decades to come. But for private markets, I think there's just a lot of money going into startups, many of whom are not going to make it.
So the thing that's interesting about this, and Brad kind of alluded to it when we were talking to him, is the idea of it's so expensive to have this processing power, to buy these GPUs.
Yeah.
And it's not as easy as, 10, 15 years ago, creating an app and building a network, which was sort of what we saw venture capital support in that generation.
Yeah.
Is there a concern that, you do early stage investing, you do seed startups, you do seed investing. Is there a concern that these companies just can't raise the capital in order to support that?
So there are large models that the big technology companies are investing in that have billions of parameters that you need billions of dollars for GPUs. We have been investing at Cowboy Ventures. As you mentioned, we're seed stage investors. Actually, our first AI-driven enterprise software company we invested 8 years ago, where they use what we call a small model, where they don't need to buy GPUs. They basically get a proprietary data set. In that case, the company's called Textio, and we basically got HR-related documents, job specs, performance reviews, and we train the AI using very situational specific parameters to basically understand how it can help people write performance reviews more effectively, how it can help people write job specs more effectively, and you just don't need the giant GPU to be able to do that work. And then also, a lot of it is around how you solve the problem for everyday business users. Instead of them using Google Docs or Word, you need to figure out how would I get into their workflow, whether it's through Workday or Lattice, and how do I actually create those integrations so that the way that the AI can be in the business process of everyday people inside the enterprise. And so I think that's those kinds of business or industry-specific applications, you don't need billions of dollars to build those applications.
But is that scalable? Okay, I'm listening to you. Is that scalable elsewhere?
Elsewhere meaning
other industries, like that model.
Completely. So we're seeing, I think, a lot of there's the application layer and there's infrastructure, right? So there's money going into both. At the application layer, that's where a lot of VC funds are playing right now. So, and it makes a lot of sense because so many people in, whether it's the food and beverage industry, in hospitals, in education, people are still using pen, paper, spreadsheets. They're not actually leveraging the underlying data, and the applications they use every day are not smart. And so I think there's pretty much every industry and every application that we look at today is going to have new applications that are powered by AI. So it is a tremendous opportunity.
Okay, speaking of opportunities, I'm wondering what's more difficult in this world where cash can earn 4.5% to 5% in T-bills, okay? That's an opportunity.
Yeah.
What's harder right now? Is it harder to go raise money from investors to then deploy? Or is it harder to find the companies to deploy that money into?
We're very fortunate. You know, we're a pretty disciplined fund. We've been around for over 10 years now. We've had pretty much the same investors, or what we call LP limited partners, for pretty much the 10 years. So we're very fortunate. And they are savvy investors who understand the upside of investing in venture capital firms, and they know it's a 10 to 15-year investment. So fortunately for us, it has definitely gotten harder. And I think in many ways it's good because it holds us very accountable. Is like there are benchmarks that you have to beat to be worth investing in, and that's our job, is to make sure that we beat those benchmarks fund after fund. And also we raise every 3 years or every 4 years. So you know you raise the fund and then you have 3 years to basically go find some great investments. So it's gotten quite competitive in private markets. A ton of money flooded in 2020, 2021, and it's probably not going to recede. And so there's just more money chasing private companies than ever.
One thing I wanted to ask you, Aileen, is with all the attention on AI, what's being neglected maybe in the venture world, or where do you think we should also be thinking about when it comes to tech innovation?
I mean, I do think, that's a really good question. I think the big boom when interest rates were basically zero in 2020 and 2021, it brought so much attention to the venture capital and technology world that actually what we would have considered long-tail markets, parking garages, like companies selling software to parking garages got funded. Like the unicorn analysis that we did in 2013 versus 2023 showed a huge difference in the amount of money that's going to industry-specific software. And so in the original unicorn analysis in 2013, it's quite interesting how it flip-flopped. It was 80% consumer companies and 20% enterprise software companies. 10 years later, it flip-flopped and it became 80% enterprise, 20% consumer. And in those enterprise, you've got climate tech companies, you've got agriculture companies, you've got companies serving parking garages. So entrepreneurs, especially I think since the iPhone debuted in 2007, pretty much everyone in the modern world understands the power of technology. And so if they work in a port, if they work at a nursing station, they understand how much inefficiency there is and how much opportunity there is for technology to actually reinvent the way they do things and let humans do what they do best better.
Still waiting for healthcare to really embrace technology in a big way.
Keep waiting.
Give you a chip with all my information. I'm ready to do that. I actually am.
If you need a copy of the X-ray, here's a CD-ROM for you. I'm not joking.
Earlier today, actually.
That's still the way it works.
I only have like 10 seconds. Vinod Khosla speak earlier today with Emily Chang, and he was saying that the thing that he's going to tell President Biden tomorrow is that every person should have a personal doctor and every kid should have a personal tutor, and that would reinvent both education and healthcare, and it would be amazing.
We have to wrap.
Yes.
Thank you so much.
feel like this age of abundance over the last few years of just how much was being made?
For my personal taste, I am thrilled at what I get to find every night if I have time to look for something. So I personally don't think too much was made. I think the customer will tell us when there's too much made and they won't watch things. And I think part of the misalignment I talked about before is imagine if things didn't get picked up or movies didn't get made that people didn't watch or go to see. That's how it used to be. The customer decided. I do think there's going to be less made in the middle price range. I think there's going to be more made in the higher price range because when you get to global events like Barbie or Oppenheimer or Super Mario Brothers, it's worth the investment, and it's clear that the audience is there, and they just need to be given what they want. The middle, which ends up, quickly on one of the services in a way that we're watching movies that we don't know how they got made or when they got made and all of that. I think that will probably be curated better, and I hope there's more inexpensive things that give more people the chance to express themselves and have their work seen.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Now, your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Apple will deliver some of its upcoming artificial intelligence features this year via data centers equipped with its own in-house processors, all part of a sweeping effort to infuse its devices with AI capabilities. Apple shares today, part of a broader tech rally. We do have Apple shares up now by 1%. The gaming giant Roblox is seeing its shares plunge after the company reported a bookings forecast that fell short of analyst estimates for the second quarter. The San Mateo, California-based company forecast between $870 million and $900 million. Wall Street was expecting $902 million. Right now, we've got Roblox shares down by 21.2%. Warner Brothers Discovery reported sales and profit that fell short of analyst expectations as the entertainment giant wrestled with lower TV ad sales and poor performance of video games. The parent of CNN, TNT, and other cable networks generated sales of $9.96 billion in the first quarter, compared with the $10.3 billion average of projections on Wall Street and down 7% from a year earlier. And right now, we got Warner Brothers Discovery shares trading higher by 1.4%. AMC Entertainment Holdings, the largest movie theater chain, reported a first quarter loss, the result of a thinner slate of releases from Hollywood after last year's strikes by writers and directors. AMC now lower by 5.8%. And Robinhood Markets posted its second straight quarterly profit as higher interest rates and cryptocurrency trading fueled revenue growth. Shares of Robinhood down now by 4%. I'm Charlie Pellet. That's a look at some of our company news, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, you are listening and watching Bloomberg Business Week. Carol Messer along with Tim Stenevec. We are live in lovely San Francisco. We're on a roof, and it's the Bloomberg Technology Summit, and it's really just this cross-section of everybody who's anybody, really, in the world of technology. AI definitely a topic, but so much more.
Yeah, AI so much more. Our coverage is going to continue. We got Reid Hoffman joining us a little bit later in our program. He is the guy behind LinkedIn. He's the guy behind PayPal.
LinkedIn,
I've heard of it. You've heard of it. He's going all in on AI. Hey, we're going to have much more from the rooftop here in San Francisco at the Bloomberg Tech Summit in just a few minutes. First up, though, a check on world and national news. Amy Morris is in the Bloomberg 99.1 News. in Washington, D.C. Hey, Amy.
Hi, Tim. Israeli Prime Minister Benjamin Netanyahu says his country will stand alone if it has to in its war against Hamas, threatening to deepen a crisis in relations with the United States. This after President Biden warned that he will stop additional shipments of offensive weapons to Israel if the country goes ahead with a ground invasion of Rafah. Some Republican senators say they're crafting a resolution condemning the president for his decision to suspend the shipment. The Pentagon has teamed up with SpaceX to block Russia from Starlink. Now, Russia's used Starlink in its war in Ukraine. Outgoing Assistant Secretary John Plum tells Bloomberg the U.S. has been heavily involved in working with SpaceX and Ukraine to counter Russia's use of Starlink terminals. He says Russia will keep trying, but that the U.S., Starlink, and Ukraine will stop them. Adult film actress Stormy Daniels has now wrapped her testimony in Donald Trump's criminal hush money trial. Trump's lawyer told the judge he plans to renew its call for a mistrial based on Daniels' testimony and that they'll seek to prevent former Playboy model Carrie McDougal from testifying. The judge said the jury would be dismissed at 4 this afternoon, after which he will take up the defense's arguments. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and now back to Bloomberg Business Week with Carol Masser and Tim Stenovic.
All right, Amy Morris, thank you so much. Carol Masser along with Tim Stenovic live here at the Bloomberg Technology Summit in San Francisco. Yep, we're on a roof. It's beautiful outside. It's always beautiful in San Francisco.
I got news for you. This is California, okay?
It is California.
Doesn't matter what day it is.
Says the guy from California.
Yeah, it's a great place.
Listen, we're going to continue our conversations, and I'm assuming AI is going to creep into a lot of what's to come.
Well, you were just at Milken.
I was.
And there was actually this year a ton of AI at Milken. Elon Musk was there. Didn't talk Tesla at all.
Not at all.
Quite a bit about AI, though.
He did. And I was looking at some of my notes in terms of what he said. And he talked so much about we don't want AI that's brittle. And he said AI might be the most important question of all time. And he said we need to build AI that's safe for us. Interesting from the guy who kind of lives a little bit on the edge. But he was part of OpenAI, right, to begin with.
And his concern is that the guardrails aren't in place when it comes to AI. And he's got a different view than a lot of other folks who say, okay, well, he's sort of a doomer when it comes to AI. He's like a science fiction guy. There are people on the other side who see, limitless possibilities and don't necessarily need those guardrails.
And it's interesting to hear about the guardrails. This is the guy who really, if you think about what he did to the EV world and kind of awakened it when everybody said it was going to take much longer. He's the guy who wants to develop Mars, thinks, I don't want to abandon Earth, but I want to develop also another planet. But he said AI, it's got to be taught not to lie, nor things that are not true. This is important that we treat, that AI, in terms of the information we get from it, that it's accurate, that it's true.
Here's what I'll say.
What are the guardrails necessary to do that?
You know what Mars doesn't have?
Guardrails?
Sunny rooftops with the ocean over there and mountains behind us. That's what Mars doesn't have.
Well, I think about the conversation we're going to have with Reid Hoffman. All of a sudden, people are saying, LinkedIn, look at it. It's a safe space to kind of have real conversations, accuracy, truths, if you will. I don't know. We're going to see what he has to say about AI going forward.
All right, looking forward to that. Don't go anywhere because you're listening to Bloomberg Business Week. You're watching Bloomberg Business Week. Up next on Bloomberg TV, it's The Close on radio. It's Bloomberg Business Week.
Live from Studio 2 at Bloomberg headquarters in New York, I'm Scarlett Fu.
And I'm Alex Steele. So I gotta say, it's a little bit of a nothing burger today. So it's a default, which is buy stocks. Let's get a check in here on where markets are headed. So you get the S&P, the stocks index is down by about 0.3%, but the S&P is up overall. You definitely have the NASDAQ and the Dow all in the green. The Dow actually outperforming as well. Within the S&P, you got the S&P Real Estate Index. That's the best performer, up by 2%. Then below that, you have the S&P Energy Index. And then you have utilities. So I don't know what you make of that. A little bit of cyclical and a little bit of safety and defensive all kind of lumped in, leading the S&P higher. And the 30-year yield is down 3 basis points. We had a super solid 30-year auction. We can clearly take down the supply that's coming out. You're getting a bid all across the curve, Scarlett.
All right. So as you can tell, stocks are higher, bonds are higher as well. So on the face of it, markets are pretty calm as investors await new catalysts to clarify the timing for future rate cuts. But you look under the hood, and it's clear that earnings continue to drive entire higher sectors, like ARM's tepid full-year guidance pushing chip makers lower, as you just showed us. But in just over an hour, we're going to be watching for SoundHound AI and Marathon Digital results, and of course, we'll bring those to you. In the meantime, Bloomberg is hosting big names at big events from coast to coast. We're going to be hearing from Reddit CEO Steve Huffman and OpenAI's COO at our B-Tech Summit in San Francisco. Here in New York, we've got the Sell-Side Leaders Forum featuring Peng Zhao, the head of Citadel Securities, among others. Alex?
All right, Scarlett, let's kick things off right now with Peng Zhao, the head of Citadel Securities, speaking right now with our own Eric Schatzker.
Negotiated, but you were still only, as you put it, playing around with the technology, looking for use cases. Where are you now?
So first of all, I think the broader trend of everyone getting fascinated with ChatGPT, and I think Catherine from Bloomberg and I talked not that long ago about how much my daughter and I enjoyed using ChatGPT. I think we're kind of getting over the phase of just playing with it, right? And now we're asking.
The novelty's worn off.
The novelty is wearing off.
Okay.
That's a good thing because we're now asking the more serious question of what can we use this for? The lesson we have learned so far are twofold. We have been finding the most amount of success either to do something that's relatively easy and quick to do and maybe cheap to do that would affect many members of our team. So that's helping them to code more efficiently, helping them to retrieve information, knowledge more efficiently. Those things would affect a large swath of the employees within our firm, and the technology available to do that is readily accessible. Or we use some of the lessons that's learned from the more recent development in AI, but a lot of times machine learning and other areas that's adjacent to generative AI, and we try to solve some of the hardest but highest value problems that we're trying to solve internally.
Such as?
In another word, if you take, let's just say if we go take this group of the highest productivity, highest value add researchers and ask the question of what are they doing that we can help automate and make the loop at which they iterate on their ideas go faster. That's a hard problem to solve, but we're finding just as much success in that because the reward from solving that problem is that much greater.
Whose LLMs have you found useful so far?
The difference are becoming smaller and smaller.
Interesting.
Yeah. And that's a phenomenon where over the last 12 to 18 months, the progress within the latest LLM algorithms, the performance progress has been slowing down. That allowed all the different players to essentially catch up to each other.
There is some excitement about the next iteration of generative AI, whether it's ChatGPT 5 or Anthropic's, whatever. It's supposed to, I guess, extend the capability of the artificial intelligence to decision tree reasoning, what they call Q-star. I am certainly not an expert. Is this something that you're interested in, and do you see applicability to what you do at Citadel Securities?
So I'm interested in it on a technical level and as an individual who's done this type of research when I was in grad school. But from a business perspective, we will react after we see it. Nowadays, it's hard to tell what's real versus not until you see it.
One of the things we did talk about as well last year was the potential for AI-powered disinformation to become a real risk in financial markets. For example, to manipulate retail investors. Do you see any evidence of that happening yet?
Luckily not yet. I think the meme-driven stock trading has subsided somewhat, where that's certainly not been part of the market condition and market story that we're seeing this year. I think that's a good thing. But the other thing we talked about is the upcoming election, and I personally remain concerned about that.
Citadel is one of, I believe, 7 firms backing FMX, the new futures exchange being launched by Howard Lutnick of Cantor Fitzgerald fame. In fact, some of those firms are probably with us here in this room. Why are you interested in this, and what potential for success do you think FMX really has?
So we've had a history of supporting and backing exchanges. We find the launch of new exchanges a very efficient and effective way of driving innovation, resiliency, and efficiency. And BGC have had a strong track record of launching successful exchanges. So we have done that, and so are the partners, many of them here in the audience. So I think our consensus is there's a huge amount of opportunity for BGC to build on top of the success they've already had with Phoenix in Treasuries and innovate and push the frontier on rates futures forward.
But if the members exchange, after 5 years, has only been able to take mid-single-digit market share away from NYSE and NASDAQ, why does it stand to reason that FMX might do better against CME?
So we would argue the members exchange has been a very large success.
Okay.
Within a period of time that's years shorter than the closest comparison, IEX, it's now have a multiple of the market share that IEX has. It's further driven real innovation in market resiliency and market efficiency, and it's more recently also launched both a options exchange and started its technology outsourcing business. It's been a huge source of innovation and an exporter of efficiency and resiliency for the whole market. And we believe FMX will do just that.
Two quick topics to finish with, Peng. The first is Bitcoin ETFs. What has Citadel Securities, experience been so far with Bitcoin ETFs in terms of demand? And
our own Eric Schatzker speaking with Peng Zhao, the head of Citadel Securities at the Bloomberg Sell-Side Leaders Forum here in New York. If you want to check out the conversation and the ones that will follow, go to LiveGo on the Bloomberg terminal. Alex, the old adage, sell a main, go away. Aside from selling, go away seems to be the theme of the day. Volume is down 25% from the 20-day average.
This is what I had a headline on my notes: Wall Street snooze fest. Like, yes, we're seeing upside in stocks. It feels like the default is just go ahead and buy equities, blah, blah, blah. But you're right. Volume is down. Hard to see a catalyst. It feels tricky to see a catalyst in the equity market till we get NVIDIA. And then for the economic data, CPI. That's like miles off.
I know. CPI is next Wednesday, and NVIDIA is about a week and a half away.
Yeah.
So, prepare for a lot of days of slow trading. So let's continue the conversation, because coming up, market analysis from Amy Wu Silverman, equity derivatives strategist over at RBC Capital Markets. She's got a lot to say about NVIDIA.
Oh, yeah. Plus, Shopify racking up analyst upgrades on the back of the stock's worst drop on record yesterday. We're going to get into what's fueling the optimism.
And coffee chain Dutch Bros brewing something big. A conversation with the CEO, Christine Barone, about what's next for the company. This is Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg. Top experts. Great questions.
Morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power.
This is Bloomberg.
I think, again, we are in very, very early days in terms of the capabilities of what this can unleash for our society. Incredibly excited to be part of it, but I don't think we're part of a hype cycle at all. I think there's a lot of innovation taking place, and frankly, the innovation that's taking place and the inventions that we're seeing, it's just breathtaking. So no, I don't personally view it as a hype cycle at all.
That was the ARM CEO sharing his big expectations for AI, and investors are eyeing those artificial intelligence players ahead of NVIDIA's much anticipated results on May 22nd. Our next guest says, interestingly, this is the first time we have not seen exuberance from the options market ahead of NVIDIA earnings. The woman behind that call, Amy Will-Silverman, equities derivatives strategist over at RBC Capital Markets, joins us now. Okay, if there's not exuberance, is there negativity and pessimism? Like, are we looking at puts on NVIDIA right now into the numbers?
So we're not, but sometimes it's this lack of excitement that's actually kind of exciting. It's kind of interesting because, Alex, since May of last year, the call option demand on NVIDIA was through the roof, like historic, unseen before. And so the fact that we've actually seen this exuberance sucked out of the market, that right tail being absent, to me is very telling because it is a noticeable shift in sentiment from what we've seen all these past quarters.
But NVIDIA doesn't report earnings until May 22nd, so there's time for that narrative to change or that mood to change as well. Do you tend to see big swings in mood changes when it comes to a company like NVIDIA?
So it's interesting, you are right, especially these days with 0DTE, that 2 weeks in options may as well be infinity. But what I've seen happen is, especially with the other Mag 7 having reported the last few weeks, usually NVIDIA sentiment stays stable, but it hasn't this time around. We actually started to see it inflect during Meta's earnings, during Google, Apple's earnings. And so to me, that was interesting because there was actually shift in option sentiment sort of as a prelude to this earnings, which is coming up.
So what does that tell us about the numbers? As in line good enough then to move?
I think in some ways it tells us that we can't just rely on the FOMO and the MOMO and the AI frenzy, which to some degree has been what we've seen from the derivatives market, and some of that momentum has kind of begat more momentum. We can't rely on that tailwind, and that definitely has been a tailwind, Alex. I think it does have to be idiosyncratically the stock does well, that bar has to meet that expectations, because you're not getting that tailwind from options, which has usually kind of kept that steam going.
So interesting. So are we seeing exuberance tied to other AI plays? I mean, NVIDIA is not the only one out there. It was kind of the original one, but there was a lot of excitement attached to AMD. There was a lot of excitement attached to MicroStrategy. Of course, that's a whole different animal on its own. But do you see that playing out elsewhere in some of those names?
So I will tell you, what I think is fascinating is this inflection in sentiment has been not unique to NVIDIA. I think we focus on NVIDIA because it's one of the few that hasn't reported, and it's also a proxy for sentiment. But Supermicro, for instance, was another one where we saw what we call skew inversion, so that historic demand of call options outweighing put options. We've seen some of that sucked out of the market, too. We've seen it sucked out of the market in terms of Mag 7. The way I would read this is with that exuberance gone, the bar is just that much higher. And the second part of that is folks who have historically been a little afraid to hedge because it's sort of like the train just keeps running in one direction. You're kind of seeing them poke their heads out as well, which is, again, not saying things are bearish, but you are seeing that shift in sentiment speak for it.
So what are the trades right now?
So we sort of have three broad trades that we think are interesting. In terms of Mag 7, something simple like a QQQ hedge using puts or put spreads. I cannot, just the historic level of cheapness in the left tail is stunning, Alex. So vol, the volatility of VIX it's dropped to its 0th percentile. It can't go any lower, And then the other one in terms of IWM, so sensitivity to that Russell 2000, if we believe in a left tail of even rate hikes or just rates higher for longer, we just don't see that baked into any of these indices. Really, people have not been focused on the left tail, but we continue to see risks bound.
What does that tell you, that given the uncertainty that's out there, whether you're talking about the economy or geopolitics halfway around the world, even fundamental risks given how much and how far prices have rallied, what does that say about sentiment and the fragility or the durability of the gains that we have posted?
I'd say one, I think there's a little bit of complacency. And two, there's a little bit of this aspect of market structure and options has changed a lot, and some of it is being masked. So there are these themes that we've talked about since the beginning of 2024, volatility suppression, the idea that zero data expiry trading has made all the activity, all that tenor shrinkage come so close kind of intraday that something like headline VIX doesn't really tell you the nervousness we feel short term. And so these technicals are sort of masking the risks. And third, just because it has not worked in the past in terms of geopolitical risks for hedging doesn't mean it couldn't work in the future.
Right. I mean, it hasn't worked in the last however long, but that could always change, right?
Yeah.
Amy, really appreciate your joining us.
Thank you.
Amy Wu Silverman is equity derivative strategist over at RBC Capital Markets. How many times have we heard people talk about the VIX being broken, how it's not really a signaling tool anymore?
That's why I wonder, I mean, if you want to look on a macro level, if you can't understand the skew and stuff like Amy does, do you need to look at gold? Like, is that now a good reflection of safety, or is that just straight up like China's central bank is buying some gold and that's what's moving it? Like, are there other things you can look at to help judge the underlying risk? Or it's just like the lack of performance in small caps at the end of the day?
No, it's a good point. And of course, because of the option structure market structure changing so much, it's so easy to buy options on your Robinhood app, right? So you don't really have to think through any of this stuff. You just buy.
Yeah, no, I don't do that. But I know some people do. I'm sure Robinhood people do. Yeah, why not?
No, we don't do that.
We don't do that. Also, because I don't know what I'm doing. So there's that.
All right, coming up, online retailer Shopify may have disappointed in the first quarter, but some analysts are still finding upside to the stock. We've got that in our top calls. This is The Close.
You actually offer a payout at 7 years to encourage people to explore if they don't find themselves in management position. I mean, what's the thinking?
Yeah.
I mean, like, what's that about?
We're not forcing everybody to be kicked out, right?
But you encourage people to explore.
Exactly. We encourage people to think about their, because sometimes it's easier, even for me, if I don't need to change everything, it's easier. Right? Change is really tough thing for everybody. Should I do this job for next 5 years, 10 years, or should I try a new thing? If I had to think, that is a great opportunity to think about it. We need to think about what kind of talents I can have for the next 5 years, 10 years. What's the best way to contribute to the world?
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
It is time now for our top calls. Look at some of the big movers on the back of analyst recommendations. And let's start with Cheesecake Factory, an upgrade to outperform from Market Perform over at Raymond James, which set the price target to $42 a share. The analyst says the restaurant chain's first quarter results showed encouraging same-store sales resilience despite softer industry trends. He says margins have risen beyond pre-pandemic levels again, giving some upside to the stock's low valuation. The shares right now up by more than 5%. Affirm next in line. JP Morgan lifting the buy now, pay later company's rating to overweight from neutral. Disappointing quarterly sales from Shopify spurred a sell-off and overshadowed Affirm's earnings beat. The analyst, baffled by the reaction, urging investors not to let a good sell-off go to waste. Now that he sees an attractive entry point, the shares up, as you can see, by more than 8% on the day. And let's end things on Shopify, the Canadian e-commerce retailer getting a few upgrades after its first quarter report, including one from Piper Sandler. Analyst Clark Jeffries feels that Shopify's profit expectations and valuation were more right-sized. There are a few areas that could drive a thaw in sentiment, but not enough to justify an underweight rating. He lifts his recommendation to neutral with a $63 price target. The stock just trading below that right now, off by a third of 1% at $62.50, and those are some of our top calls. Now, we're happy to say that the analyst behind that call joins us now, Clark Jeffries, Senior Research Analyst at Piper Jaffray, covering commerce and industrial software. Clark, good to speak with you. What did you see from Shopify that prompted the analyst action?
Yeah, certainly. So the most important update we got was on profitability and growth in operating expenses. I think it's helpful to think about the context of last year. Last year was a year of incredible progress on profitability, and we think expectations on shares were getting a little bit elevated into the end of the year. Thus, our sell rating at the end of the year. We now have 2 data points of operating expense growth after the company restructured and sold its logistics business. And we now have a more realistic operating expense trend. And so really at this point, we think that the elevated expectations are out of the numbers. Consensus and buy-side expectations have now converged. And so from here, we think we can get more productive on estimates.
So Clark, the way I understand this company, if I just dumb it down for me, is that if I want to sell anything online, I have to use that software. Do they have any viable competitors? Because if not, it's just a matter of how long can e-commerce grow and how much can they make on it?
Yes, there is a field of competitors. I would say that there's a more substantial technology in the upper end of the market, certainly in the enterprise. A lot of the lower end part of the market is evolving in terms of e-commerce functionality, vendors that provided website services, kind of up-leveling into e-commerce functionality. But this is a vendor that has a substantial share already of the North American e-commerce market. So valuation expectations are built off of a different level than say a starting point of 0.
I got to ask you also about Shopify selling the majority of its logistics unit to Flexport. What's the thinking behind that, and is that going to pay off down the line in the long term?
So I would frame the logistics business as a very difficult business to get scale and get margin in. I think that there was obviously a big incentive to solve a big friction point for merchants, and it made sense from a strategic standpoint. But I think it was a difficult thing for investors to right size in terms of the ultimate margin potential for the business. And so I think part of the outperformance you saw last year was alleviating that concern, that overhang on what the margin structure of the business could be with logistics. And so, huge progress during 2023 was on the back of that sale.
So Clark, medium term, what kind of growth profile are we looking like for a company like Shopify? And then what kind of free cash flow margins are we looking at?
Yeah, so, this is a company that will probably still grow within the 20% range in terms of gross profit growth, rough revenue growth. The company was targeting low to mid 20s in terms of Q2 organically. And so, I think that's still in play here. The free cash flow margin is the backstop, and why we wouldn't have kept a more negative stance. The company is going to be at least a low double-digit free cash flow margin, company for this year. And so, the broader context here is, this is a more than $8 billion run rate revenue company that's grown for 4 quarters over 25% organically. So, still think of it as a very premier tech asset. Mm-hmm. We're just now at a point where expectations and numbers are in the right place for maybe getting, a more equal balanced stance.
All right, Clark, really appreciate it. Thanks for jumping on with us today. Clark Jeffries over at Piper Sandler. I was talking to Anurag Rana, Bloomberg Intelligence, yesterday on Shopify. Man, he could not say good enough things about Shopify, just in terms of the innovation and how good the CEO was and everything. It was amazing. Like, he doesn't dole out those compliments that quickly, but just the idea that this is like a revolutionary major player.
Yeah, praise is hard to come by from him. But one thing I think that you really encapsulated nicely was that Shopify's prospects really just lie in e-commerce. As long as people continue buying on their tablets or their phones, this company will benefit.
Here's something I always think about. If you were going to sell something online and like make something, what would it be? And have like a store?
Yeah, I need to.
What would that be?
If I figured that out, I probably wouldn't be here.
No, it would be like sport. You'd be something like sports memorabilia, like sports retail sale thing.
Let's wait for the Rangers to win the Stanley Cup. I think I shouldn't have said that out loud, and then we'll come back to that.
Okay, we'll do that. I was thinking like secondhand clothes. I don't know. Anyway, coming up, you get a standout quarter from Dutch Bros. And also the expansion plans are going to be huge. Starbucks warns Dutch Bro does really well. We're going to talk for Christine Baroni, the president and CEO, next. This is Bloomberg.
The biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? It's just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
This is Bloomberg.
It's just about 3:30 p.m. in New York. This is the Countdown to the Close. I'm Scarlett Fu.
And I'm Alex Steele. Like I said, volume really light. Yes, stocks are higher, but let me tell you, it definitely feels like we're going to wait for NVIDIA for any equity market action. It's like Wall Street on snooze.
That's like a week and a half from now.
Hey man, I don't know. Maybe you mish tomorrow. We'll do something. I like University of Michigan. Maybe CPI next week. Individually though, on earnings, we're definitely getting stocks that are moving. And one stock is Dutch Bros. It's up almost 19% this week after a quarter that one analyst called a fairly impressive report. It's also going to offer up new seasonal beverages and expand in states like Florida and the South. And joining us now for more is Christine Baroni, President and CEO of Dutch Bros. So we're not familiar with Dutch Bros in New York. You like the South, fine, whatever. We'll get to that in just a moment. But can you just describe to me your growth profile for the next year and how it's looking?
Yeah, absolutely. We love the West Coast as well. We started in Grants Pass, Oregon. We have 876 shops now at the end of Q1 across the country. We opened our first 2 shops in Florida, and we're really continuing to expand coast to coast. So from California to Arizona to adding shops in our existing markets to going more into Florida, going more into Tennessee. So lots of growth plans in front of us. We're projecting to open about 150 to 165 shops this year.
Wow. I find that so fascinating because I pulled some quotes from some earnings calls from maybe what we'd say some of your competitors in essence. You got Starbucks CEO saying many customers are being more exacting about how and where they choose to spend their money. Amazon CEO saying that customers are shopping but cautious. McDonald's saying macro headwinds have been more significant than they anticipated into the coming year, yet you're expanding at a very rapid pace. What do you see that they don't?
Yeah, I think that when you look at an environment like this, it is just so important that you're delivering on exactly what your customer wants and what your team wants. And this quarter, we just had, I think, an awesome quarter where we were firing on all cylinders. We rolled out really great new innovation. So we rolled out protein coffee. We rolled out Pop and Boba. Our rewards program, 66% of our transactions are coming through that program. And we're also having great success with paid media in building awareness in new markets.
You mentioned California earlier, so I have to ask you, Christine, about the new minimum wage law for fast food workers there that takes the hourly wage to $20. What does that mean for Dutch Bros? I know that for the industry at large, it's resulted in menu prices going up.
Yeah, absolutely. So we have just a wonderful business in California. We're continuing to open new shops in California. We did take a small price increase in California, like many others did, to look at that. But we're still very pleased with how we're doing in California.
Does it give you pause, though, when it comes to expansion plans and whether you want to continue building out your presence in California, or given the cost structure, maybe it makes more sense to look at other markets?
Well, we're continuing to look at markets really across the country. As of right now, we're continuing to expand in California as well as all of the other markets that we're in.
So, Christine, I'm sure if I asked Starbucks and McDonald's, are you delivering what your customers really want? They'd be like, totally. Yet that's what you said in answer to why you're able to grow when they're seeing struggles. Is it also how you run your operations? Like, how do you run your operations maybe in a different way than a traditional fast food place?
So I think what's most important to us and what's incredibly core to our brand is our service model. And so every single thing we do starts with our Broista. And we only expand new shops when we have an operator that's been with the company for an average of 7 years to go and open that new shop and open that new market and build a relationship with the community that we're going into.
In terms of maybe other points of inflation, though, like input costs and stuff, we all talk about cocoa, say coffee, etc. How do you manage those price fluctuations, and what do you notice that's sticky?
Yeah, absolutely. So those are things we're watching closely and that do move up and down quite frequently within our business. You know, we sometimes lock in things when it makes sense so that we have that steadiness across our business. So we do have a fair amount of foresight into what's coming on all of those commodity prices.
Christine, I got to ask you about Panera scrapping its caffeinated drinks, those charged sips, following lawsuits that they led to adverse, in some cases even fatal, health effects. what was the takeaway for someone like you in terms of how you look at your lineup of drinks and how you roll them out and how you assure your customers that you've done your due diligence and these are safe drinks?
Yeah, absolutely. So we have an extensive process as we're looking at launching new drinks to customers to ensure that they're also going to love them as well. So we do a lot of screening before we launch new drinks. We also have nutritional information that is readily available through our customer service team and also at our shops.
Christine Baroni, President and CEO of Dutch Bros. Thank you so much for joining us.
Thanks so much for having me.
Really appreciate it. And of course, neither of us have gone to one, but you are about to embark on a trip in which you might go visit one.
Yes, ma'am. I'm going to Nashville, Tennessee for radio in a couple weeks, and I feel like I'm going to stop by a Dutch Bros.
Yeah. Are you going to get a caffeinated drink, or what's your
I'll get like a coffee, but like energy drinks scare me. Nothing against Dutch Bros or anything, but like that, I don't know.
What about boba? You like boba?
I never had a boba.
Yeah, be careful, because if you're not aware of it, you'll just end up swallowing it.
Like all the thing. But the whole point, like, do we like it?
You like chewing it?
Chewy. I mean, I like that.
Yeah, it's kind of like candy in a way.
Right, and you can make it more sweet or tart or something, right?
Yeah.
Okay, I might try one of those too.
Yeah, you can adjust
double fist that.
All right, we'll check in with you when you go to Nashville and find out your
pour it on the ground.
Coming up, powerful conversations from the Bloomberg Sell-Side Leaders Forum. You're going to hear from the U.S. Bancorp president coming up next. This is The Close on Bloomberg.
Your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
The Bloomberg Sell-Side Leaders Forum is currently underway in New York. This conference brings together business and industry leaders to discuss how financial markets can leverage emerging technologies and also adopt new strategies, digital strategies, to drive growth. Our Manus Cranny sat down with U.S. Bancorp President Gunjan Kedia. Take a listen.
I'll tell you what's on my mind, and it's informed a lot by all the clients we talk to, which cover many, many sectors. But I would say the short-term conversation, because we are bankers, is very focused on cost of capital right now. Interest rates, the shape of the curve, inflation are very present conversations with a lot of our clients in some sectors like banking and commercial real estate. These are sort of quintessential conversations. But they tend to be focused in the short term. There is sort of a longer-term expectation that the inflation story will settle properly in a couple of years. The bigger conversations that are more introspective about long-term trends, which is what we are discussing here, there's a big conversation around technology and AI and what that does to different industries and business model. When I first started hearing it, it felt a little bit like, is this an internet or is this blockchain? And there's a little bit of that doubt, but it feels a little bit more like as impactful as the mobile phone or the internet or the cloud. So that's a big conversation. The second is just labor. Second, very expensive input to almost all business models. Just a lot going on with the workforce. It's getting very expensive for almost every industry. So a lot of conversation there. And finally, I'll capture geopolitics, although I'll tell you, when you talk to a client who's running an agricultural firm in Central Valley, California, geopolitical impacts are very different. They're worried about immigration, seasonal workers. You talk to an industrial company that sells to China, they have a very different level of concern. But those are sort of the conversations that are top of people's minds.
I'd imagine the politics across America are probably much more about America rather than what's going on elsewhere. When I was preparing for this, I went back and had a look at what Alan Greenspan wrote on the 6th of March in the year 2000, and he said this: since 1995, output per hour in the non-financial corporate sector has increased at an average rate of 3.5%. That is nearly double the pace of the preceding quarter of a century. For anybody in the room that wasn't around for Alan Greenspan, he had a thing or two to do with the Fed. So with that in mind, I mean, when you look, let's talk about the technology piece.
Yeah.
From what you've seen, from what you've experienced, and you've been in this banking industry a reasonable length of time, are we about to embark on some kind of major productivity shift, as we're all talking about? Or what can you tell me that sort of matches that? Do you think we're going to see that kind of velocity in the AI technology revolution we're in at the moment?
Well, the question is, we need something, because if you just look back 20, 30 years and what propelled sort of GDP growth across, big labor pools in China and India were coming online at very cheap rates. We probably had the most significant wave of offshoring talent. Women were coming into the workforce. In every which way, the demographics of the baby boomers moving through the workplace, it was a big driver of growth for all of us. So now what are we looking at here? A lot of those trends are reversing. India was the first time not having replacement population growth. So what will create the next level of productivity? The hope is AI. If we can get that kind of a productivity boost out of a technology, it will drive, another 20, 30 years. The question is, can it happen? Is there enough energy in the world to have that kind of impact? And how do you harness it? So this is a very big leadership question on the mind of every industry.
That was U.S. Bancorp President Gunjan Kedia. Of course, he's going to bring in Alan Greenspan. He's channeling some Tom Keene there. Some Boeing news that's coming across the terminal right now. The SEC is scrutinizing statements that Boeing made about its safety practices following a near-tragic January accident aboard one of its 737 MAX 9 planes. So the SEC now is probing Boeing's safety claims after that panel blew off the plane. The stock is still up by 0.3%, but if you just look at an intraday chart, you can just see like a move lower lower off the highs of the session at the headline crossed.
This is also a stock that's lost 31% of its value so far this year. So I don't know that it's exactly news at this point, or new news at this point, that yet another regulator is looking into Boeing. The other thing, Alex, of course, that you got to keep in mind is that these SEC reviews don't always lead to enforcement actions as well. When it comes to false or misleading statements, they could lead to fines, but that's a whole different animal, isn't it?
Right. But it also feels like for Boeing, just the constant stream of headlines that come across, just to get stability is going to be very difficult, especially when they're undergoing their CEO search. At the end of the day, remember the National Transportation Safety Board said the panel was missing 4 bolts to hold in place when it left Boeing's factory. They're kind of figuring out what to do about Spirit Aerosystems at the same time. None of this makes that any easier.
It doesn't make it easier, but at the same time, they're making planes that all these airliners need. So demand is still there.
Isn't that the truth? That's what happens when you have 2 of them. All right, coming up, we continue to count you down to the closing bells. Micah Cugino, president over at the Permanent Portfolio Family of Funds, will be joining us. This is The Close on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. The top names in global leadership are on Bloomberg.
The ultimate goal of doing away with the central bank still stands. The discussion regarding the central bank is primarily moral in nature. The way we see it, there has been a cultural change in Argentina. Today, wages are miserable, not through our own fault. That is due to 20 years of populism. Argentines have understood that populism is no solution, and that the quick fixes they sold to them during the last 100 years, both the criminal politicians and criminal economists, they were all false. And we need to opt for a pure orthodox market-based solution. And that's what's going to make us succeed. And that's what's underway. In fact, there are already indicators today that show that activity in the agriculture sector, in the oil and gas sector, in mining, well, our economy is recovering strongly in those departments. There are indicators that point to the fact that Argentina could really make a strong comeback.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and Radio. Context changes everything.
This is the countdown to the close. I'm Scarlett Fu alongside Alex Steele. Snooze fest, as you put it, when it comes to the equity markets, when it comes to the bond market.
Right, but not snooze fest for Boeing, although the stock is actually not doing that much. It's off the highs of the session, but that breaking news at the SEC is looking into some safety protocols and safety claims from Boeing after the panel blew off the plane.
Yeah, absolutely. SEC scrutinizing everything, just one of many regulators who's doing just that. Let's bring in now Allison Versperl. She's Bloomberg News aviation regulation reporter. Allison, the SEC looking into statements that executives have made about their safety practices. What can you tell us about what these investigations usually result in?
So, we have, in this case, we kind of have an example of something similar in the past. In September 2022, Boeing agreed to pay $200 million to settle SEC allegations over statements that it had made or didn't disclose about issues with the 737 MAX in particular related to those fatal crashes in 2018 and 2019. And so these types of SEC investigations, they can lead to big fines for companies, which obviously isn't great for them, and then there's always the public perception as well. But I will point out, right now this is just an investigation. These don't always lead to enforcement action, so I'll make sure to put that out there as well.
Any comment from Boeing on this? What would be their pushback to this?
So Boeing, they just declined to comment, so we're not hearing much from them on this front. This is just one of several legal headaches that they have at the moment. We already know that DOJ has been investigating from the criminal side this incident with the door plug blowing off the Alaska Airlines flight. So it's, one of the many headaches for Boeing of late.
All right, Allison, thank you very much. Allison Versperl joining us there on Boeing. That stock is still up by 0.3% off the highs, but still also off the lows. So take your guidance from where that comes from. All right, in the markets here, we're looking at low volume all across the board in any index that you're looking at, but the S&P is still up by 0.5%. The best performing stock within the S&P is Equinix, and this is a real estate story. That's why the S&P real estate sector is also the best performing sector within the S&P. The NASDAQ 100, though, outperforming. That's kind of interesting, and the Russell outperforming up by a full 1 percentage point. I mean, this is the deal. When you get the S&P doing well, the Russell's going to do well. The question is, can you really trust these moves? Have we sort of done all the selling we needed to do into tax season, Scarlett, and now we're just going to see some relative calm in the market until we get to NVIDIA?
I feel like we're at sell in May and go away, and I recognize that these are all green arrows right now, but there's not a whole lot of activity. There's not a whole lot of conviction right now either.
Yeah, you're just looking for direction. And where are you going to get it? That's the thing. If we're just going to be on hold from the Fed for months and months, where is that direction going to come from?
PPI, CPI, NVIDIA earnings, and then after that, wait for the summer earnings.
In the meantime, buy stocks, buy bonds. That's exactly what's happening today.
The path of least resistance, right? All right. Earlier, we spoke with Amy Wu Silverman. She's the equity derivative strategist over at RBC Capital Markets, and we asked her about the hype in AI names. Take a listen.
We can't just rely on the FOMO and the MOMO and the AI frenzy, which to some degree has been what we've seen from the derivatives market, and some of that momentum has kind of begat more momentum. We can't rely on that tailwind, and that definitely has been a tailwind, Alex. I think it does have to be idiosyncratically the stock does well. That bar has to meet that expectations because you're not getting that tailwind from options, which has usually kind of kept that steam going.
For more market analysis, let's welcome Michael Cugino. He's president and portfolio manager at the Permanent Portfolio family of funds. Michael, are we seeing a bigger rethink, reassessment of the AI play that dominated trade since last year?
I think gradually. I think it gets down to simplicity and common sense, though, and I think Amy's right on a macro level. You're going to need more than hype to get continued gains. Whether they're at the levels we've seen or going forward, you're going to need some substance and growing revenues, growing earnings, seeing how AI is applied to different businesses and how profitably. And so I think that is longer term the next leg up in that area.
So Scarlett and I have been talking for the whole day about the lack of volume in the market, what the next catalyst is going to be. Do we have to wait for May 22nd for NVIDIA to come out to really help us understand that dynamic? Or is it going to be CPI? Or is it honestly just going to be wait until the Fed actually cuts?
Well, NVIDIA is clearly important for the reasons we gave, plus the broader market. But there's a whole big market out there with many asset classes besides stocks. that are not waiting on NVIDIA. So I think investors have to sort of decide where they want to be, invest accordingly. The two broad themes would seem to be we're in the beginning or middle stages of a continued bull market. There's some validity to that started last fall. It seems to continue to bleed up. It's been supported by corporate earnings. And so that's one direction. The other direction is, are we sort of inching to a stagflation, slowing growth, recessionary scenario? And you could argue that the labor data recently has been softening. The composition of new jobs is not as strong in terms of animal spirits. The news today with new claims and continuing claims, et cetera, gradually going up. Interest rates are higher for longer. So there's those issues that would lead to some sort of leading to a slower growth but stickier inflation environment. And we've also seen stickier inflation data. So depending on where you sit on those two broad stories, you invest accordingly. We would tend to gravitate towards the latter and advocate for a pretty diversified approach.
What's your take on this idea that as much uncertainty as there is, and you kind of encapsulated that nicely with the diverging points of views on what could happen, you have a lot of companies taking advantage of the fact that spreads are really tight and they want to come to market now while they can, while risk premiums are tight. Specifically, you've got more than 40 investment-grade firms selling $53 billion of bonds this week through Wednesday. In the high-yield space, issuers price about $11 billion of bonds. What's the take-up of that, and what's the risk appetite out there for something like that?
Well, that's an area we love with our fixed income in both our permanent portfolio and our flexible, versatile bond portfolio. So we're basically low duration, high quality balance sheet, finding a lot of opportunities in the shorter space in corporates. And we continue to do that. The yields are competitive. You're not getting compensated right now going out too far in duration, but you're getting very competitive yields and performance. And so for the investor that doesn't want to have to predict too far in the future, but still get a competitive return in bonds, that's an area you want to be. Companies are recognizing that, I think. And it's a reasonably quiet time. You mentioned the lack of volatility and trading volume. It's a quiet time to maybe come to market, get something priced, and get set up. Interest rates could be lower, but the Fed has indicated that they might not be lower for a while. So if you need capital or want to raise capital at reasonable rates and quiet time, this is a good time to go to market.
Michael, where's my safety trade? So if I was nervous, not that I'm saying I'm nervous, but I do like soup cans and gold bars under my bed. But if I was nervous, where would I go put that money while I'm dealing with the uncertainty?
Well, earlier you mentioned some people are investing in stocks and bonds. I noticed you didn't mention gold, and I would have added that in there. I think the market for gold is going to be a strong one going forward. The dollar is very, very strong right now. I don't see that continuing forever. It's been strong for the last decade. There are reasons for that, but still, be that as it may, it's very, very strong right now, and it's likely going to weaken. That's a headwind for gold. Central banks are big buyers. There's a lot of geopolitical risk. There are some countries out there that if they attain a critical mass in terms of creating a currency, global currency to settle transactions in other than dollars, that would be bullish for gold. And retail demand is strong. Plus, you've still got sticky inflation and geopolitical risk. So there's a lot of reasons why you want to add some gold to that mix. I would also say there are other certain sectors of the equity market that are interesting and attractive. I would point to energy and commodities as being one. Areas where you can control pricing power and you can manage your cost structure, areas that pay very good dividends, total return stories that are trading below market multiples. And so I think that's an area in the equity market that is attractive despite, the relatively rich pricing we have right now.
I mean, S&P Energy Index, third best performing sector in the S&P. Utilities is number 2. You can make the argument that's not necessarily just a safety trade anymore. Michael, great to see you. Thanks so much, Michael Cugino, President and Portfolio Manager over at the Permanent Portfolio family of funds. We're almost there to the closing bell. We're almost there to Friday. We do get the UMISH numbers, I think, coming out tomorrow, right? We get UMISH, and then next week get the CPI. But I do think it's interesting when you take a look at what's been performing well, utilities, energies, materials, and industrials. Utilities, I think you can put put that into the cyclical category now because of the power growth due to AI and the power demand. So it's interesting change, I think, in the sector.
I know you've been talking about this a lot, which I think is really smart. In addition to the fact that they pay that steady dividend and investors are into income, they're obsessed with income, and that's exactly what utilities deliver.
And there are the closing bells. You have green all across the indices here. You have the Dow Jones Industrial Average ending up by 0.8%. The S&P up about 0.5%. The NASDAQ up by 0.3%. Within the S&P, you're looking at 416 stocks advancing just for 87 that are not. A pretty broad-based rally led by real estate as well as utilities, Scar.
Yeah, it's worth mentioning as well that with the S&P 500 back above 5,200, it's at its highest level in a month. Feels like it's been a little bit of a stealth rally back up. I know there's a lot of nervousness about, maybe not nervousness, that might be going too far, but there's a little bit of
apprehension
maybe about some of the AI names that hadn't existed since May. And so, of course, we'll actually get more certainty come May 22nd when NVIDIA reports. But up until then, we're just kind of meandering here